Biden was said to propose doubling the capital gains tax to near 40% for the wealthy. S&P turned lower after Bloomberg News reported the likely proposed plan on how investment income is taxed. We've got gold lower now by $12 the ounce, down 0.7% at $17.81. West Texas Intermediate crude down 0.2%, $61.19 a barrel. Intel says 70 people working for a construction contractor at an expansion of the company's manufacturing plant in Ireland have contracted COVID-19. Intel will be reporting after the closing bell today. Intel shares lower now by 2.1%. Again, recapping lows of the day. Steep selling for Wall Street with the S&P down 48, a drop of 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Let's get to the Market Drivers Report. And let's set the Business Week agenda. Dave Wilson, stocks editor at Bloomberg News on the remote access in New Jersey. Michael McKee, international economics and policy correspondent at Bloomberg News on the phone in New York City. Before we get to the big news, at Bloomberg exclusive on the president really looking to boost capital gains tax. Dave Wilson, just quickly set the stage for us. Charlie giving us those major equity averages, but what are you seeing about the trade and the impact of that news having on that trade?
Well, I mean, the S&P 500 was basically at its high of the day when we reported on the Biden proposal, at least the potential proposal for capital gains taxes. And you're talking about a rate as high as 43.4% potentially, up from the current 20%, because you have a surtax on investment income on top of the capital gains tax rate of 39.6%, which is basically where you are for other income at this point. So, you know, you put that all together. I mean, you've seen stocks really kind of take a nosedive when the headlines hit and fall further since then. We're at the point now where all 11 of the main industry groups in the S&P 500 are lower. Technology stocks taking some of the biggest hits. And you look at individual shares, you have 4 down in the S&P 500 for every one that's up. I mean, some of those declines clearly earnings related, but, you know, the broader theme of what happens to taxes and how people might kind of rethink their investing in light of that possibility of higher rates. I mean, it's certainly getting people's attention here.
Yeah, it's like nobody's thinking about the economic recovery, but nobody's thinking about earnings, nobody's thinking about virus cases. Michael McKee, we got to bring you in here.
Yeah, it's all about taxes. Mike, weigh in on this. What do you make of this, Michael?
I'm thinking about economic recovery.
Okay, so talk about it a little bit. I mean, look, we did get economic data earlier today.
Yeah,
thanks.
Well, we got economic data today that suggests things are better. 547,000 initial jobless claims. Big surprise. It went down significantly 2 weeks in a row. So maybe there's something to it besides just a seasonal distortion. So it does point us in the direction of economic healing and that the economy is going to start picking up. But I got to tell you, the tax thing reminded me of something that I have not heard from anybody. We've only had this out for like an hour, you know. But here's something to keep in mind, and you can ask people about this when you interview them later on the show. Back in 1994, Bill Clinton raised the capital gains tax. And we went from a budget deficit to a budget surplus because at the time we had the tech bubble. And as people sold stock, we had an enormous amount of investment income taxed that went into the federal government's coffers and brought down the federal budget deficit. And I'm wondering if maybe history would repeat itself. You know, we haven't put a name on this stock market, whether it's a tech bubble or something like that, but we have very high valuations. And if people end up selling and the market keeps going, it could be good for the overall finances of the government. Maybe not yours, but the government's.
Yeah. Dave, come on in on that. I mean, you've been covering this for that long. Like, take us back there and take us into what Mike is saying.
Well, you know, the timing of that 1990s tax increase, you know, couldn't have been better from a perspective of raising money out of the stock market because, you know, as Mike mentioned, you had the multi-year internet-driven bull market, you know, and now we're in a situation where we're kind of at the highs that we were back then and even higher depending on how you choose to measure. So, you know, there's a real question this time around of how sustainable the gains in stocks might be And sure, if you get some selling to kind of lock in the lower tax rate before you get an increase, I mean, that's not necessarily something that's going to last years down the line and necessarily reap the kind of benefits that you saw in the 90s. I mean, that's going to be something, is definitely part of the equation here.
Yeah, I mean, we're talking about what for folks who are earning over $1 million, right? This is when this stuff starts to kick in, and if you're living on the coast,
potentially
it's going to be even more. Yeah, exactly. I mean, Mike, you've seen a lot of actions proposed by Congress or by presidents that make some really great headlines and maybe stir up the markets for a little bit, but then ultimately go nowhere. What's the environment for this right now?
For that kind of increase, I think it's not very good. And I'll give you two names that will maybe explain why. Nancy Pelosi and Chuck Schumer. Where are they from? Chuck Schumer represents the state of Wall Street. Yeah, and so he's probably not going to be extraordinarily enthused about that higher rate. Now, the idea that capital gains rates could go up, he's on board with, and so are the Democrats in general. But that kind of increase, I think, is going to be a hard sell.
Maybe this is something of a starting point for the Biden administration, similar to what it did when it floated a corporate tax increase that was lower, that is higher than what the Trump administration put into place, but lower than what it was before that. And then coming out a few days later, reporting saying essentially, hey, their administration is willing to go lower. Dave, what do you think of that?
Well, I mean, that may well be possible. We've certainly heard President Biden in the past talk about his willingness to negotiate certain points. So, is it a starting point? Is it a trial balloon? It's potentially that. It's clear that the government's looking to raise taxes where they can. At least the Biden administration is. So it's a matter of how it kind of plays out from here and what the ultimate effect is on people's willingness to invest in stocks.
All right, we're going to leave it on that note. Guys, thank you so much. Dave Wilson, stocks editor at Bloomberg News on the remote access from New Jersey. Mike McKee, international economics and policy correspondent at Bloomberg News. I mean, in terms of going back to certain environments, we really need to look at the political backdrop, completely in terms of what was being spent, where there were other spending cuts, in terms of looking at a budget surplus as well.
Let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
All right, so let's get to the bite. Today's number is 5. Working from home does make you more productive. A new study found remote work will lift U.S. productivity by 5%, mostly because of savings in commuting time. The findings suggest the rapid adoption of new technology amid the pandemic will offer lasting economic gains, helping to boost sluggish productivity that has long weighed on global growth. This has been a story that I remember Alan Greenspan talking about forever. Study, by the way, polling more than 30,000 workers found 20% of full work days will be from home after the pandemic, compared with just 5% before. I have to say, I was really productive at home.
I was not. But I can say I'm not surprised by this, given that working from home means rolling out of bed for some people and just going right to the desk, skipping the commute. So who knows?
Well, I got 2 hours back from not commuting in it. I definitely put it to use. All right, let's get a check on world and national news. Over to Nancy Lyons in D.C. Hey, Nancy.
Hey, Carol. President Joe Biden's 2-day climate summit is underway with participation from 40 heads of state, including China's Xi Jinping and Russia's Vladimir Putin. President Biden set the tone for the meeting by announcing a goal to cut U.S. emissions by 50% from 2005 levels by the year 2030. He calls climate change the existential crisis of our time.
No nation can solve this crisis on our own, as I know you all fully understand. All of us, and particularly those of us who represent the world's largest economies, we have to step up.
Biden says Canada is among the other nations stepping up, pledging to strengthen that country's climate ambitions by slashing 2005 emission levels by 40 to 45% by 2030. One of the alternate jurors in the Derek Chauvin murder trial is discussing her experience. Lisa Christensen was not part of the group of jurors who reached a verdict in the trial, but she did sit through every minute of the 3-week proceedings. She spoke with CBS this morning on having to watch the video of Floyd's last moments over and over again.
It was emotional. I think my eyes teared up a couple of times. So, especially seeing it from different angles and things.
Christensen says the prosecution made a really good, strong argument.
Oh,
A funeral is underway for Dante Wright, the black man shot last week about 10 miles from where the Chauvin trial is held. The police chief says the officer mistakenly used her gun instead of her taser. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. We're going to get into what's going on with COVID-19 and the vaccine rollout. We're going to check in with Dr. Amish Adalja. He's going to be back with us from Johns Hopkins. But in the meantime, a couple of stories that certainly are on our radar. One has to do with a long hauler study. One of the largest studies of COVID-19 long haulers has proved what many doctors suspected. Not only are many patients suffering a raft of health problems 6 months after infection, they're also at significantly greater risk of dying.
Okay, so let's talk numbers here, because this is a distressing story, and it was among the most read on the Bloomberg today. Survivors had a 59% increased risk of dying within 6 months after contracting the SARS-CoV-2 virus. Researchers reported Thursday in the journal Nature. The excess mortality translates into about 8 extra deaths per 1,000 patients. That worsens the pandemic's hidden toll.
Yeah, and what they did is, I mean, those are tough numbers. They also documented the cascade of debilitating effects that plague survivors months after diagnosis, and it's things like blood clots, stroke, diabetes, breathing difficulties, to heart, liver, and kidney damage, depression, anxiety, and memory loss. They also found the risk of complications was far higher than with the flu. I have to say, when I got my first shot, the nurse who gave it to me, I said to her, "How are you?" And she goes, "I'm okay." I said, "I'm a little nervous." She goes, "That's pretty normal." She said, I go, "How are you?" She goes, "I'm okay. I had COVID right at the beginning." She was out of work for a long time, and she goes, "I still have long effects
This
as a result
was
of
like
it."
a year ago.
This was a year ago, yeah. She said so, and she didn't get into the details of what's going on, but you know, she just kind of reminded me that this is just nothing to play around with.
Yeah, it really is. And I also want to give an update from Brazil,
Yes.
Which is suffering a crisis among the worst in the world right now. It's an area where COVID is starting to kill young people more and more. People in their 20s and 30s are leaving the hospital in body bags.
Right, exactly. And listen, like we've seen throughout the world, that early on, just like in Brazil, you saw the elderly, the immunocompromised first hit hardest. In the past couple of months, though, the nation is increasingly seeing a lot of younger people being impacted by COVID. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Tax talks and stocks lower. Stocks fell after President Biden was said to propose doubling the capital gains tax to near 40% for the wealthy. S&P 500 turned lower after Bloomberg News reported the likely proposed plan on how investment income is taxed. S&P now down 36 points, bouncing off the session lows, down 0.9%. The Dow is down 328 points, down by 1%, and the NASDAQ Composite Index down now by 124 points, down 0.9%. The NASDAQ 100 Index lower now by 1.2%. Russell 2000 is down by 0.1%. 10-year yield 1.55%. Gold is down $13 the ounce, down 0.8% at $17.80. West Texas Intermediate crude oil down 0.2%, $61.21 a barrel. Some of the names reporting after the closing bell today include Intel, down now by 2%, Snap Inc. lower by 1.9%, Mattel unchanged, and WWE World Wrestling Entertainment down now by 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yes, indeed. Charlie, thank you so much. Every day there are many stories about the virus and vaccine rollout. Tim and I just, I felt like, brought you two disturbing ones about long haulers, a study showing COVID can kill months after the infection, and then Brazil, how it's expanding out to younger people. The other thing, Tim, you and I have talked a lot about is what's going on in India.
Yeah, the rising cases dramatically there, especially given that a year ago, this was a country that was in lockdown. This is happening so quickly.
Yeah, it's really tough to kind of watch. Let's get an update, though, on COVID-19 and what we're seeing globally when it comes to the virus. Dr. Amish Adalja is an infectious disease physician, senior scholar at Johns Hopkins Center for Health Security at the Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Adalja with us on the phone in Pittsburgh. Dr. Adalja, nice to have you back here with Tim and myself. How are you?
I'm good. How are you?
Doing okay. Although a little bummed out by some of these long hauler stories and also just looking at what's going on in India. Everybody keeps reminding us that unless we get this globally under control, we will not get beyond COVID. How do you see it?
I definitely think that's the case, that we have a worldwide pandemic and the world will still be disrupted. The world will not be safe until this virus is controlled in all the countries around the globe, and it's going to take some time, probably well into 2022. So there really needs to be a shift in priorities as we get most of our population vaccinated to trying to tame this all over the globe. And it's going to be, one of the biggest public health challenges that we face, because it is a really steep uphill battle in places like India and Brazil and even Europe and even Canada.
What's the right way to do that, though? Is it with the mRNA vaccines, or is it really with these other vaccines, potentially the Johnson & Johnson vaccine, the AstraZeneca shot, ones that don't need to be stored in such cold conditions, one that don't necessarily need 2 shots?
It's all of the above. It's whatever you can do. So if you have places that can handle the storage requirements of the AstraZeneca and Pfizer vaccines, you can use those. In other places, you're going to need to use the Johnson & Johnson and AstraZeneca vaccines. And there are other vaccines as well that we have some data from that are developed in other countries. But it really has to be anything that you can get into people's arms that has efficacy at preventing serious disease, hospitalization, and death needs to be what occurs. And there are mRNA vaccines that are in development that don't have those storage requirements. So, for example, there's a German company called CureVac that has an mRNA vaccine that doesn't require that cold temperature storage. That could also be an option. Remember, we've got Novavax in the wings as well. Their phase 3 data should be coming out. So there's likely to be multiple candidates, and I think we just basically have to blanket the world with whatever they can get in order to stamp out this infection.
Well, I just want to push that a little bit further. I was talking to somebody who's from India and was just talking about all the vaccines that they are developing specifically. We don't really hear about it because we're focusing so much, at least in the U.S., on some of the vaccines that we directly have access to. But, ultimately, as you said, we're going to need multiple tools. That's been kind of a story from day one on all of this. Or do you see, in terms of getting it really under control globally, that companies like Moderna, Pfizer are really going to have to step up big time?
Moderna and Pfizer are, their vaccines have been proven to be highly efficacious. They have manufacturing capacity. They've not had any major hiccups. I do think that they're going to be a component of how we vaccinate the world. whether or not they're the major component with AstraZeneca and Johnson & Johnson and other vaccines, as well as Chinese vaccines, Russian vaccines, and other ones that we don't know about. It's likely to be a hodgepodge, but I do think that the vaccines that have the most proven track record tend to be the Pfizer and Moderna vaccines. So those are obviously going to be ones that people will try to use if they have the ability to use them in those situations. But I don't think that AstraZeneca and Johnson & Johnson should be dismissed. I think those are really great vaccines and I would take those vaccines now. I think those vaccines should be used in the United States as well. But so I really think it's going to be a portfolio approach, and each country is going to have different requirements and different capacities to be able to vaccinate.
When do you think J&J, that shot could be approved again?
Friday. I suspect that Friday the pause will be lifted. You'll see something similar to probably what the EMA did. There'll be a warning label on it saying that there is the side effect risk of clots, and that if you are at a higher risk for those clots, if you're in that age group that they saw this signal in, have a discussion with your doctors. I suspect Friday, and hopefully this will be something that we can resume at the same pace as before. I don't know if that's going to be the case because some polling does show vaccine hesitancy has increased with Johnson & Johnson. But it is important that now Johnson & Johnson has unpaused what's going on in Europe. They're going to continue the rollout in Europe, which is really important. And hopefully we'll see this vaccine return to kind of its place of prominence, I think, where it belongs.
Hey, Dr. Georgia, in just the last minute that we have, and then we'll come back with you. I'm wondering about what happens if the virus goes uncontained in other parts of the world when the United States does get to so-called herd immunity. I know the worst-case scenario is that variants develop, that can penetrate vaccinations. But does anything indicate to you that that could be a real possibility right now? Because these vaccines thus far have proven really resilient to these variations, right? These variants.
Exactly. So I do think variants will continue to occur as the virus spreads from person to person. But I'm confident that our vaccines will be able to stop what matters: serious disease, hospitalization, and death, even when it comes to problematic variants. That's what we've seen so far. But it will be challenging if the world is still not containing this virus, because international travel, international trade, all of that is still going to be disrupted for some period of time.
Yeah, I'm not sure investors are ready for it either, or planning for it, because it really does feel as though they're focusing a lot more on the reopening trade. Dr. Adalja, we'll come back to you in just a moment. We're going to continue with Dr. Amish Adalja, senior scholar and infectious disease physician. He's over at the Center for Health Security at the Johns Hopkins Bloomberg School of Public Health, of course, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies.
A big side. Look, what I want to talk about, Carol, is messaging around the vaccine when we're back, because Dr. Adalja has taken a different tack than Dr. Fauci, for example, in the CDC. All
right, we'll get back to that in just a moment. You are listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So I always have a long list when we're going to talk with Dr. Adalja over at Johns Hopkins, because I want to talk about variants. I want to talk about herd immunity, which is a story in the magazine. In fact, it's from Marx in the magazine this week, and it just talks about what's going on and can we really get there?
Yeah, are we thinking about the end of the pandemic in the right way? Also talking about messaging around what to do when you're vaccinated.
Good point. All right, we'll get back to him in just a moment. Right now, though, let's head on over to Charlie Pellet with a check on that trading day. Hey, Charlie.
Thank you very much. Right to the numbers. S&P now down 31 points, down 0.8%. The Dow's down 299, a drop there of 0.9%. NASDAQ down 103, down 0.7. 10-year yield 1.55%. Bottom line here, U.S. stocks on track for their biggest drop since mid-March after President Joe Biden was said to propose doubling the capital gains tax to near 40% for the wealthy. The dollar rose. S&P turned lower after Bloomberg News reported the likely proposed plan on how investment income is taxed. Gold is down $13 the ounce now, lower by 0.7% at $17.80. West Texas Intermediate crude up 0.2%, $61.46 right now for a barrel of WTI. India saw the world's biggest one-day jump in coronavirus cases ever as a ferocious new wave grips the country, overwhelming hospitals and crematoriums and prompting frantic cries for help on social media. India reporting 314,835 new infections today, topping a peak of 314,312 recorded in the U.S. on December 21st. The grim milestone shows how the pandemic crisis has shifted firmly to the developing world. Dr. Jennifer Nuzzo is a senior scholar at the Johns Hopkins Bloomberg School of Public Health.
The stories that really worry me the most is hearing about shortages of medical oxygen. I mean, to think that, you can save people's lives by supplementing their oxygen and they just don't have it. Oxygen, something that's easy to make, that is really, I think, a severe tragedy.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking vaccine stocks now. Pfizer shares down 2.3%. Its German partner, BioNTech, up 5.5%. Those are the ADRs. AstraZeneca lower now by 0.8%, also ADRs. Moderna shares up by 0.1%. Johnson & Johnson lower by 1%. Again, recapping, tax jitters send stocks lower. S&P down 32, a drop of 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you, Charlie Pellet. Let's get right back to Dr. Amish Adalja, senior scholar and infectious disease physician at the Center for Health Security at the Johns Hopkins Bloomberg School of Health. He joins us on the phone from Pittsburgh. Dr. Adalja, I want to talk with you again about messaging and what a difference a vaccine makes, because we are getting mixed messages from different people about what is safe and what is not safe to do after you get completely vaccinated. Tell me what you do now that you've received both of your shots.
I'm basically as close to my normal life as I can be. And I tend to be a very risk-tolerant person, and I was taking calculated risks the entire pandemic, even before I was vaccinated. So I may be a bit of an aberration in my field, but I think it's important to remember that once you're fully vaccinated, the whole risk calculation that we've had to go through for so long is completely altered, because you are now basically protected from serious disease and hospitalization or death. You're also very unlikely to even develop symptomatic infection, and you're very unlikely to be a spreader of infection. So I do think that while the risk is not zero, it is very close to zero, and it is something to me that I find acceptable. And I think that's what we need to be telling people, that based on your risk tolerance, start to re-engage with the world. And that's going to move the needle, I think, on vaccine hesitancy, because there's many people who think that, if the vaccine doesn't change anything, why am I going through all of this? And I think there's been a lot of underselling of this vaccine, and we're paying the consequences for it.
So what does that mean, though, for people who have kids? Because kids are still a group that can't be vaccinated. And this is something I know I'm going through, my friends are going through. Okay, so we're vaccinated, they're vaccinated, but our kids aren't. So, what's safe for what's safe behavior for us? Can we all get together? We don't know.
So there's a great article in the New York Times today by David Leonhardt that I was quoted in, and some other colleagues at Hopkins were quoted that talk directly on this issue. So I recommend that. But in general, this is all going to depend on your risk tolerance. Children tend to be spared from the severe consequences of disease. Children that tend not to be major spreaders of infection. So I think that you can be much more flexible with children. Remember what you did during flu season. What did you do with your children during flu season? Probably not that much different.
But he gets a flu shot every year.
Right, even with the flu shot, the number of deaths that occur in children is, in the hundreds every year from influenza, even with the ability of the vaccine. So just remember, just try to risk calibrate. And I'm not trying to minimize what COVID-19 is overall, but in children, influenza is a more dangerous illness than COVID-19 is. And I think that's not the case in adults, and it's not the case overall. But in children, I think you have a lot more flexibility. So I do think that you can, as much as your risk tolerance allows, do this. And obviously, if you have a child that's asthmatic, that's a different story, or a child that has special needs or medical problems or lung disease or is immunosuppressed, you have to be much more careful. But if you've got a healthy child that doesn't have those conditions, I think you could be a lot more free with how you interact once your family is vaccinated, or even before, because many children have been interacting throughout this pandemic. Remember, we've had schools open, we've had daycare centers open, we've had Little League sports, and we haven't really seen major negative effects in children, nothing on the scale of what would worry me or what I think is an unacceptable risk, but that differs from person to person.
So we have a great story in Bloomberg Businessweek magazine this week. It's the remarks, and it talks about how since the beginning of the pandemic, exactly when the U.S. might reach herd immunity for COVID-19 has been furiously debated in congressional hearings, kind of shorthand for the end of the pandemic. Dr. Adalja, is herd immunity truly kind of shorthand for the end of the pandemic? Is that the case, that if we get to herd immunity, we could stop this virus, or it's not so simple?
I don't think it's so simple. I think herd immunity is an important threshold to think about it, but it's not the holy grail. To me, we get to the end of the pandemic, we get to the end of the public health emergency when we no longer have to fear for hospital capacity concerns, when we've taken away the ability of the virus to cause serious disease, hospitalization, and death. And we're going to get there long before we get to herd immunity, because for herd immunity, we have to think about vaccinating every person. And remember, this vaccine is only emergency approved for children or people above the age of 16.
Right.
We don't even include children there. So that's going to be some time. What I think it needs to be dispelled is this notion that COVID-19 is going to go away, that it's not going to be anything anybody talks about 3 years from now. That's not the case. Remember, there are 4 other coronaviruses that cause 25% of our common colds. This coronavirus, SARS-CoV-2, is going to establish itself and has established itself in the human population. It's already infected other animals. We can't eradicate it or eliminate it. What we're going to have to do is live with it, but live with it in a tamer form, because so many of our high-risk individuals will be vaccinated. But we're still going to have cases. We're still going to have disruption from it. We're still going to have to think about it. But it's not going to be something that's very different from many of the other respiratory viruses that we deal with on a day-in and day-out basis every year, because the vaccine will have really just changed what this virus is capable of.
All right, going to leave it on that note. Dr. Amish Adalja, thank you so much. Infectious disease physician, senior scholar at Johns Hopkins Center for Health Security at the Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies.
Always love it when Dr. Adalja joins us.
Yeah.
Let's go down and check some national news and world headlines with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. Loved ones and friends are gathered in Minneapolis this afternoon to mourn the loss of Dante Wright. The 20-year-old black man was killed last week by a now former police officer who authorities say mistakenly fired her gun that she thought was her taser. Katie Wright became emotional speaking about her son today.
My son had a smile that was worth $1 million. When he walked in the room, he lit up the room. He was a brother, a jokester. He was loved by so many. He's going to be so missed.
Wright says she stayed up all night wondering what to say. Well, it's Earth Day, and President Biden opened a virtual summit of world leaders on climate change by pledging to pursue ambitious new goals to reduce emissions.
The president stressed the job-creating potential of clean energy.
The United States sets out on the road to cut greenhouse gases in half by the end of this decade. We'll set America on a path of net zero emissions economy by no later than 2050. All of us, and particularly those of us who represent the world's largest economies, we have to step up.
The leaders of China, Russia, and Great Britain accepted President Biden's invitation to join the summit, as did Pope Francis and executives of corporations that have set clean energy goals. In Washington, Irv Chapman, Bloomberg Radio.
Tensions may soon be easing in Ukraine after Russia's announcement today it will begin pulling thousands of troops back from the border beginning tomorrow. It's seen as a step that could calm strains with the West. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic, and our most read story on the Bloomberg in the past 8 hours came out just about an hour and a half ago, and it certainly made markets go lower. It's a Bloomberg exclusive, and it has to do with what we've been talking about, Nancy mentioning it as are others. President Biden proposing almost doubling the capital gains tax rate for wealthy individuals to 39.6%, which, coupled with an existing surtax on investment income, means that federal tax rates for investors could be as high as 43.4%, according to those familiar with the proposal. And depending on the state you're in, especially whether it's New York or California, you could ultimately end up paying a lot more in taxes.
Yeah, topping 50%, Carol. The plan would boost capital gains, as you mentioned, for those earning $1 million or more. That's an increase from the current base rate of 20%, though there is that 3.8% tax on investment income. That's what funds Obamacare. Stocks, though, sliding on the news. The S&P 500 moved lower. Bank stocks moved lower, especially those smaller banks moving lower on the news.
It's interesting, too, and our team over at Bloomberg News, Claire Ballantyne, Katie Greifeld, talking with a lot of folks around Wall Street. Chris O'Keefe, Managing Director at Logan Capital Management, saying the first impact would be people deciding they're either going to take their gains now or try to get ahead of it. You could see people pull forward their gains to this year. It would potentially reduce the flow of capital because people would be less willing to take gains and move on to something else. People would be less willing to trade if they had to pay a tax that high.
This was something that Press Secretary Jen Psaki was asked about at the White House press briefing today, and she said, quote, "We're still finalizing what the pay force would look like, but I will say that the president's calculation is that there's a need to modernize our infrastructure, there's a need to invest in childcare, there's a need to invest in early childhood education and making our kids and the workers of the next generation more competitive, and he should propose a way to pay for it. His views is that it should be on the backs of the wealthiest Americans who can afford it."
So we're talking about the American Families Plan, right? And all of his plans in terms of the next step in terms of spending and really kind of positioning the United States for the future. But again, you spend a lot of money, you've got to figure out how to pay for it. So this is certainly one. But as you said, maybe it's a starting point, and we'll see what kind of negotiations go on. All right, you're listening to Bloomberg Business Week. We're going to get to the cover story in the magazine. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet-Vidal. The S&P, NASDAQ are all declining. We are off session lows, but stocks are on track for their biggest drop since mid-March, after President Biden was said to propose doubling the capital gains tax to near 40% for the wealthy. S&P down 28, a drop of 0.7%. Dow Jones Industrial Average lower by 262 points, down by about 0.8%. NASDAQ down 90 now, a drop of just under 0.1%. 10-year yield 1.55%. Gold is down $11 the ounce, down 0.7% at $17.82. And West Texas Intermediate crude up 0.5%, $61.65 a barrel. After the bell, we'll be hearing from Intel, lower now by 1.6%. Snap down 1.3%. Mattel down up 0.6%. And World Wrestling Entertainment down now by 0.8%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. President Biden, Tim, getting ready to mark his 100th day in office. That'll happen this coming week. And with that in mind, this week's cover story in Bloomberg Businessweek magazine takes really kind of a look back, reminding us of all the things that President Biden had to deal with when he took office. The health pandemic, a sagging economy, a reckoning with centuries of racial injustice, and the existential threat of climate change. But it ain't over.
Yeah, now comes the hard part. Nancy Cook is White House reporter at Bloomberg News, joining us on the phone from Washington, D.C. Nancy, I am really happy that we're getting to speak with you about this cover story in the latest issue of Bloomberg Business Week. When you think about the first 100 days, how has Biden done? Like, how has he been able to do this?
I think most people would say that Biden has done a pretty good job. He has a majority of Americans support him in polling. Democrats, even people who wish that Senator Elizabeth Warren or Bernie Sanders had won the nomination, they're really happy with him. And he's even polling well with Republicans who feel like, he's done a pretty good job handling COVID. And so what he walked into chiefly were, a pandemic and low vaccination rates and schools closed and the economy really in a slump. And the first 100 days has really been about trying to solve those two crises. And they've done a lot of that by ramping up the vaccine distribution, by getting more people vaccinated, and then passing this sweeping $1.9 trillion COVID relief bill, which gives money for things like testing and school reopening. And so much of the first 100 days have just been dealing with crisis, and now becomes the hard part where he's really trying to do something to cement his legacy.
Right. Listen, he came into office. I mean, the whole pandemic, nobody had a playbook, but it did feel like they hit the ground running with a playbook in terms of dealing, with the vaccine rollout and dealing with economic stimulus and a lot of things. What is the playbook for the next 100 days? What does it need to be? What do people say it needs to be?
Well, I think the playbook that they're trying to do is, now that they have, they still have to deal with the pandemic, and there's still a lot of fallout from the economic downturn. So no one in the White House is discounting that. But what they're trying to do now is sort of reshape the economy and propose some big ideas that Democrats have long wanted to do. And so that includes everything from infrastructure to more money for child care and elder care. And that's this sweeping set of packages. President Biden's going to unveil this third one that he's talking about on Wednesday, this coming Wednesday at the State of the Union. And the most recent two packages, the infrastructure and this upcoming families one, that's more than $3 trillion in spending that they are proposing. They want to offset it with tax increases. But again, it's a huge amount of money, and their goal is to really not just bring the economy back to where it was, but also sort of try to make some tweaks to it and reshape it.
So obviously it's really ambitious, and the Biden administration and Democrats, well, the Biden administration, is Biden's president. Democrats control the House and Senate, but barely. And there are some moderate Democrats who don't support these plans as they are right now. How does Biden sell this? And to what extent does it involve selling the plan to the American people in a way that President Obama didn't do when it came to Obamacare?
That's a great question. So the way that they sold the COVID relief bill, which is the way they're going to try to sell these two bills, was really to try to build public support outside of Washington. so what they have tried to do is define unity or bipartisanship, not really as Democratic lawmakers and Republican lawmakers on Capitol Hill agreeing, but more to try to promote policies and put forward ideas that appeal to the majority of Americans. And so with the infrastructure package, for instance, 70% of Republican voters are in favor of rebuilding roads and bridges, more job training, increasing broadband access. And those are the things that the Biden White House is going to keep focusing on, these plans that appeal to Democratic and Republican voters, not necessarily just lawmakers on Capitol Hill. That's really the political strategy.
Is it a smart strategy? Does it work? Will it work?
It works with the COVID relief bill. It works very well. And I think that they feel like, based on what they saw during the Obama administration and how much Obama was tied up with trying to go after Republicans and woo Republicans who didn't really want to work with him, I think that the Biden administration learned some lessons and felt like they had to go another way. And it was a gamble, but it worked for the COVID relief bill. And I think they're going to try the same thing with these next two packages.
So enter 2022, and that's when, the midterms are. And I'm wondering how the ambitious goals that the Biden administration has right now have to get done before 2022 and how that can change the landscape in Washington.
Well, really, they feel like the midterm elections, the party in power typically loses. And so I think the White House is very focused on the midterms, and they feel like, they have a window of time to try to get these major things done, and they're going to go for it. And I think so much of the argument heading into the midterms for the Biden administration is going to be an economic one. Are you better off financially than you were 2 years ago? Are you making more money? Is the stock market in a good place? Are the kids' schools reopening? Are there more people in the middle class? And so it's interesting because it's an area where Republicans have so dominated. Typically, Republican politicians get higher polling for their handling of the economy. But what we've seen in recent polling is Biden's getting very high marks for his handling of the economy. And so much of that political argument in 2022 is going to be around that.
Nancy, what about, though, taxes and higher corporate taxes or capital gains taxes, which obviously are skewed towards the wealthy and corporations, but I do wonder how that might impact. You need to pay for what he's trying to do. I get that, right? But I do wonder how that might impact something like the midterms ultimately.
Well, I think it depends what they can pass through Congress. I feel like the Biden administration is thinking big and proposing what they want, and then what passes through Congress is like a whole other reality check. But also raising taxes on corporations and wealthy people right now polls really well. I think that there's a feeling during the pandemic that wealthy people worked from home. They held on to their houses. They managed to ride it and they were okay. Whereas a lot of other frontline workers, were put in dangerous positions, having to go to work or lost their jobs. And so the idea of in polling, raising taxes on corporations and wealthy people is overwhelmingly popular now. And I think the Biden administration is trying to take advantage of that.
What's the key metric for us to keep?
Are on track for their biggest drop since mid-March after President Biden was said to propose doubling the capital gains tax to near 40% for the wealthy. The S&P turned lower after Bloomberg News reported the likely proposed plan on how investment income is taxed. S&P now down 31 points, or off session lows, but still down 0.8%. Dow Industrials down 270. That's a drop of 0.8%. Nasdaq lower now by 103, a drop of 0.7%. Nasdaq 100 index down 1.1%, but an up day for the Russell 2000. Small cap shares up now by about 0.2%. 10-year yield 1.55%. We've got gold down $11 the ounce, down by less than 0.1% at $17.82, and West Texas Intermediate crude up 0.5%, $61.65 a barrel. The European Central Bank left its key stimulus programs unchanged, with almost 900 billion euros of support still in the pipeline as the economy lags the U.S. and China in a drawn-out struggle with the COVID-19 pandemic. Christine Lagarde is the ECB's president.
Incoming economic data, surveys, and high-frequency indicators suggest that economic activity may have contracted again in the first quarter of this year, but point to a resumption of growth in the second quarter.
After earnings, Southwest Airlines says it expects to stop burning cash by June. Southwest Airlines shares down 0.5%. American Airlines Holdings lower now by 3.9% after earnings. Recapping, S&P down 0.7%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed. You are listening to Bloomberg Business Week. And one of the stocks, really, and one of the companies on our radar today, really, I have got to say, for the past couple of years, it's a company that's been one of the Bloomberg 50. We're talking about Chipotle Mexican Grill. And Chipotle profitability jumping in the first quarter as it benefited from a rebound in sales and higher menu prices. So great to welcome back to Bloomberg Business Week Brian Nichols, CEO of Chipotle Mexican Grill. He joins us from Denver. Nice to have you back with us. How are you?
Yeah, I'm doing great. Thanks for having me.
Well, Brian, talk to us about the quarter, because it continues to, I feel like you continue to hit and surpass expectations here. What's working so well at the company? And I know you and I have talked a lot about the digital strategy, and that really has been paying off. But what's really just firing on all cylinders here?
Yeah, look, I think we've got our company and our people really focused on the right things. So I talked about this in the earnings call, which is, obviously we're a restaurant company, so we have to be hiring, training the best people, creating the right culture in the restaurants so that we provide the great culinary experiences that we can at our restaurants. And so we started there, and from there, we wanted to make sure we had more accessibility, and that's really where the digital focus has come in, as well as our in-dining room experience. And as you mentioned, we've made tremendous progress on the digital front. We actually had record sales for the quarter. We did over $870 million just in digital sales, which, was up in a big way. And, that's because we're giving more customers more access. And with that digital ability, it's really convenient, whether you want to order ahead and pick up, order ahead and grab it from your car, order ahead and have it delivered. And then now with COVID cases on the decline, vaccines going up, and more places opening up dining rooms, we're seeing people come back into our dining rooms for that great experience as well.
How would you characterize capacity right now compared with pre-pandemic in the actual restaurants?
So in our dining rooms, we probably have recovered about 60% of our dining room business. And we're optimistic that that's going to continue to climb as more and more places become more and more open and people get back to their normal routines, taking kids to school, going to work, whatever your normal day looks like. And the thing that's really great news about this is while our dining rooms have recovered, our digital business has not really seen any cannibalization to meaningful levels. So that's why you see the record sales in digital, even while our dining rooms are coming back.
That's pretty remarkable. You expect that to continue even as the world continues to reopen, Brian?
I do. I think people by nature want to be social, and one of the more social things to do is have lunch together, have dinner together. And then also, I don't think this is changing. When people get back to their normal routines, they want access to great, clean food in a customized fashion in a convenient way. And, Chipotle is that, right? We're food with integrity. It's totally customizable. And, the speed is pretty amazing. So I think it's going to continue. And I believe people will continue to come back to the dining rooms, and they're going to demand more access digitally. So you got to be able to do both.
Hey, what was more important, the stimulus checks that came out from the government or the handcrafted quesadillas? I'm just curious, what had a bigger impact on the bottom line?
Well, what's definitely clear is both played a really good role. And so, obviously the stimulus payments are a point in time versus the quesadilla is going to be around for a long time. And so we're optimistic about where we get to with the addition of the quesadilla in the business. And, I think putting our food into this really portable solution, which is, the quesadilla, it's just fabulous. So I don't know if you had a chance to try it, but if you haven't, I highly encourage it.
I love me some quesadilla, and yours included. But was it really 10% of first quarter sales? That just like blows my mind.
Yeah, no, it came out of the gates really strong, and the feedback from customers has been really excellent. You know, they love the experience. They love being able to, you know, get their guac or queso or, you know, pico de gallo with our quesadillas, and the digital experience has been really phenomenal. So, yeah, you know, it's a great start. A lot of new people came into our business. I think it was the highest level of new users to Chipotle in the month of March, and a lot of that had to do with the fact that we brought the quesadilla out.
Hey, Brian, I know digital was so big for you this last quarter and over the last year, but you're also thinking a lot about restaurants, looking to close to double or more than double the footprint in the U.S. and Canada in the coming years. I'm wondering how you're thinking about the restaurant experience on the other side of this, because we do know that there's likely going to be some sort of hybrid work environment where people are going to be working from home, and Chipotle has been huge for people who are working in offices, right? This is what they grab and go and they get for lunch.
Yeah.
So how are you thinking about locations differently, and also how are you thinking about store design differently to imagine some sort of new normal on the other side of the pandemic?
Because I'm also thinking there's some real estate deals out there right now because of the pandemic.
Yeah, you know, look, you're exactly right. We believe there is a lot of opportunity for us to build a lot more Chipotles, right? We're just shy of 3,000 today. You probably saw in our release, we opened 40 new restaurants in the first quarter. You know, we've guided to doing about 200 new restaurants this year. And ultimately, we want to get to, you know, 5,000, 6,000 plus restaurants. So as we think about the design of these restaurants, though, we want to make sure we've got great accessibility. So if that means you're coming in for a dining room experience, you know, I think it's important to have a great seat with great music, get your food quickly, get exactly what you want, and get on with your meal. And I think that trend is not changing. And then the digital, we've added more access by providing this Chipotle window where you can order ahead and pick it up from your car. And, you know, that's been a phenomenal breakthrough for us, where we see our, you know, our total business goes up as a result of it, but our digital business increases, and predominantly increases with the order ahead and pickup business, which is our most profitable transaction. So to answer your question, I think the good news is we're really well positioned for the hybrid work model, the return to work model. You can insert whatever normalcy is the new normal. We're ready to go because we've got access for all of those occasions. And, you know, I'm confident that food with integrity, customized at a great value, is going to continue to win the day.
And where does order and delivery come into this? Because I know that's something that you talked about in the call and in the release yesterday, and the cost of actually getting that burrito, that food to the consumer. That's expensive. How do you lower that cost?
Yeah, so look, we would love to find ways to lower the cost of the delivery channel. That's why we're experimenting and investing in companies like Nuro, where it's an occupantless, autonomous vehicle. Until then, though, you know, obviously we want to get as efficient as we can in that channel. But those costs obviously make delivery a more premium convenience. And so what we've seen is people understand that, and we pass those costs on in order to get that premium convenience. You know, there is a price to pay for it. But we would love to find ways to lower that cost so that, you know, we don't have to charge that premium.
Hey, one thing I want to go back to digital, if I can, Brian, is you recently launched a digital-only restaurant that's up in, I think, Highland Falls, New York. How is that doing? And I'm curious if there's plans for more.
Yeah, it's doing really well. Thanks for asking. And yeah, we will be doing more. I would say in the U.S., it's more of a fill-in strategy. You know, so think of some of these markets where, you know, you've got a lot of Chipotles already. We want to give people that additional access. Maybe we need, frankly, you know, you got a Chipotle doing $3-4 million. If we could put in another restaurant, do it all digital, one, it'll make the experience better at that one Chipotle, and then also gives people a better digital experience. So I think there's opportunities there. And then there are trade areas like Highland Falls where it just makes sense to have a digital-only restaurant. And so where those present opportunities, we'll obviously do that. But the majority of what we'll continue to build is a Chipotle that has all the access points, right? The thing that's great about Chipotle is we have a kitchen that is doing real culinary, fresh ingredients, the guys are just cooking up unbelievable chicken, steak, and then that kitchen services these two businesses, right? You got the digital ordering business, and you got the customer that comes in, moves down the line. And we've got the capacity off that kitchen to service both of those experiences. So, we've got a lot of room to grow still in the digital business, and we've got a lot of room to grow on that dining business. So I love the situation we're in right now.
Brian, I know you guys didn't come out with, I think, a 2021 comp sales forecast. There are still concerns about COVID and the impact. Tell me about the visibility you feel like that you do have, or is it maybe at the end of the year, do you feel like you'll start to feel more confident about visibility?
Yeah, look, I think it's just us being aware of what's happening, right? You see some regions where COVID continues to spike, and you're hearing a lot of good things as it relates to the vaccine. So as I think we just get further into the year, you'll get rid of some of that, volatility associated with COVID. And then that gives you more confidence in sharing, a number. Obviously we plan accordingly for a certain response to our initiatives. But, when there's external factors like COVID going on, I think the prudent thing to say is, hey, look, I think we've got the right plans in place to navigate it.
Right.
But it really doesn't make sense to commit to a number.
Hey, what confidence do you have, too, about food costs? I know that was one of the issues, certainly in the quarter. And is it just an issue until supply chains kind of get back up and running post-pandemic? And I'm also curious about workforce and finding workers. I know you and I talked, over the last year or so, and workers have something that's kind of always on your mind, and you were concerned about it, workers being sick or not being able to, have the necessary workers that you needed. So where are you on that front?
Yeah, sure. So first, on your question around the supply chain, the good news is our supply chain has really held up through the entire pandemic. Our team has done a phenomenal job. It's really impressive to see how they've been able to keep us in business with all the ingredients that we need, all the way to the packaging that we need. So fortunately, we're not seeing a whole lot of inflation or supply chain challenges right now. And then on the labor side of things, as we mentioned in the quarter, our business really started to accelerate when we got into March. And as a result, we were playing a little bit of catch up with hiring so that we could staff accordingly to the business. And the good news is that acceleration's continued into April. So we're continuing to put the foot down on hiring more people. When we put our effort out there to go hire and let people know Chipotle's hiring, we're having really good success. I think the challenge for us, and I think we've talked about this in the past, is once we get these people hired, how do we get them to understand the career opportunity, the development opportunity, where you can go from here, so that they can stick with us beyond the 30, 60, 90 days where you see a lot of turnover in the restaurant industry. And I think that's where it's getting even more competitive, just because everybody is trying to figure out how they can hire for kind of the business response that we're seeing right now. So we're committed to a great employee value proposition. We're also committed to people understanding, hey, look, you can really grow with our company. We're adding all these restaurants. We are, going to build organically. So if you stay with us, you grow with us, good things happen for you personally and professionally.
How do you do that from a wage perspective? What's the starting minimum wage there right now, and how do you see that going up?
Yeah, so our average wage is just a little bit north of $13. And then obviously in the cities where minimum wage is at $15, we're above that. So we've always been a payer that's above minimum wage. And the reality is, you don't really stay wherever your starting wage is that long. If you stick with us for, 6 months, 12 months, 2 years, look, you can find yourself as a general manager running a restaurant of 35 people, multi-million-dollar business, making $60,000, $80,000 with, cash and bonus. And hopefully also you do a little investing in our stock and good things happen for you, both near term and long term. So that's what I mean by really getting people to understand, look, you may come in as a crew member today, but if you stay with us for 6 months, you'll find yourself being a shift manager, a kitchen manager, and then you can find yourself being an apprentice and then ultimately a restaurant manager. So there's just a great career path if you commit yourself to the profession.
And is this playing into, you guys are offering, from what I understand, some degrees, right? In agriculture, also in culinary. I mean, this plays into it, what you're doing, Brian.
Yeah, absolutely. And we see a lot of our employees take advantage of it. It's a great program. It is a tool for retention as well, because we find the folks that do these programs, higher percent of them end up getting promoted, ending up being general managers. I mean, one of the things I'm really proud of is, I think it's just in the last year we promoted over 13,000 people, which is just, it's terrific. It's what we want to do as a company. We're really an American company, right? We have 100,000 employees, pretty much all in the United States. We're just getting started in Canada. But, we provide an opportunity for people to get a great first job that can turn into, a career that goes well beyond just the first job aspects that our industry provides.
So there's something we really want to ask you. Go ahead, Tim.
There's a lot that I want to ask. Let's start with menu innovation, though, because you were at Taco Bell for years before this, and you were known for doing big menu innovations there. Chipotle's menu, though, it's a lot simpler, and when you add something, it's a really, really big deal. When you think about menu innovation, take us into the process there, and really, what can you tell us about what you have in the pipeline?
Yeah, sure. So we use a very disciplined approach to our creativity and culinary innovation. We've done a lot of great things just over the last couple of years, right? We've had carne asada, cauliflower rice, these new tractor beverages, did a new queso blanco, most recently the quesadilla. You probably saw we're testing a smoked brisket. We're also going to continue to learn about new plant-based proteins. And I'm really optimistic about that as well. So you'll see us continue to explore places where consumers are asking us to go. But I also love the idea of our culinary team leading people, right? The fact that we have sofritas, barbacoa, carnitas, these are things that lead people a little bit in their, call it palate discovery. And you're going to continue to see us doing that. While also listening to consumers, the number one request from our guests was make us a quesadilla. So we can do both. And that's how we kind of take the approach. It's like, let's see how we can meet what they're asking for. And then let's also lead in the culinary world as well.
I remember when the sofrita was announced, and I remember being in one of your test kitchens, and it was really a lot of fun to see and hear everybody talk about kind of how they came to it and then actually sample it. All right, so the big question we really wanted to ask you is, are you guys even considering thinking about accepting Bitcoin? Everybody's talking about it. No. It's nothing that you guys ever...
I know.
Not something you guys talk about.
Well, to say we've never talked about it, sure, we've talked about it, but we've got no plans to do that right now.
All right.
The other question, any plans to add Bitcoin to your balance sheet? This one comes from a listener who got in touch ahead of this interview when they found out we were interviewing you. Elon Musk has added it to his balance sheet, but if you're not accepting Bitcoin, I imagine that you're not adding it to their balance sheet.
No, we're going to stick with cash.
Old school.
The good news is we've got over $1 billion in cash, and I like it that way.
It's a good spot to be in. Well, are you at a point where it sounds like it, because you're talking about adding new restaurants, you're thinking about, the future. Are you internally with your team, Brian, thinking about, okay, post-pandemic, what is Chipotle?
Oh, yeah, of course. And look, as I mentioned, I do believe we will become a company that's got 6,000 restaurants. I do believe we'll be a company that has, average unit volumes well beyond $2.5 million with margins, 25% plus. So it's going to be a great returning business. It's going to be a great culinary business, and it's going to be a great culture. And that's why today we have 100,000 employees. In the not too distant future, we'll have 200,000 employees. And we're very optimistic about where we go from here. We're going to continue to invest and innovate in technology, both for how our employees do their work, as well as the experiences that our customers have with Chipotle. And we're not slowing down on that. And we're not going to slow down on our culinary commitment to food with integrity. So we're going to continue to work with local farmers, regenerative farming. We believe there's a right way to raise animals and food. We think how we grow our food really can dictate the future. And so that's a really important piece of the puzzle for us. And, we're not slowing down on any of these fronts.
Brian, is that getting to be an easier process? I'm curious about that. Regenerative farming, and I feel like it's obviously still a smaller part of the ag industry, but is it getting easier? Are there more suppliers, more people getting involved?
What we do is we commit to some of these local farms that are transitioning to, organic or regenerative farming, long-term contracts that gives them the stability to do it. And so as we get bigger, we're able to do more good in this space because obviously, when you've got 3,000 restaurants today on your way to 6,000 restaurants, we can commit to these guys to be partners well beyond just right now to support them in the approach of how they raise the animal, how they grow the food, and then obviously everything else surrounding farming. So, I think it gets better for the farmer when you have big players like Chipotle really taking a position to support them through the transition. But look, we could use a lot more suppliers. We could use a lot more animals raised this way. It's the right thing to do, and we're committed to doing it.
Hey, Brian, I want to ask about taxes. As Bloomberg News has reported today, the president eyeing a capital gains tax as high as 43.4% for wealthy Americans. But I want to talk corporate taxes with you. What does it mean for Chipotle if the corporate tax rate goes from 21 to 28% or even up to 25%? How does that affect your business?
Yeah, well, look, it affects us, obviously, because we're a U.S. company. We do all our business for the most part in the United States. So, the corporate tax rate going up has an impact on our earnings. And, obviously, we'll figure out how to navigate that to invest in our company accordingly, both our people and our business. But sure, it's got an impact because, we're not one of these businesses that's got things happening outside the United States. So,
right.
I know it's early discussion on this. I hope we get to have a discussion on it because I just want to make sure people really understand the consequences on American business.
Well, what would the consequences for you be? Would that mean that you would have to change your goal of 5,000 to 6,000 new restaurants or 5,000 to 6,000 restaurants total?
No, look, that's what I'm saying. What we would do is we'd figure out, as everybody usually does, is you use some creativity to try and figure out how you can maintain your growth trajectory in a new environment. But it's just really important that everybody understands, the consequences of the decision. Not saying that they aren't manageable, but you definitely need to be thoughtful. And I know it's the early days of this conversation, and we'll look forward to being a part of that conversation. And hopefully people are willing to listen. We love being an American company. We love employing 100,000 plus people. We love being a growth company. Hopefully folks will want to support that idea.
Hey, Brian, just quickly, 30 seconds here. Glass half full, glass half empty at this point. Certainly coming off of the pandemic. How does it feel right now?
Look, I'm definitely moving more and more optimistic every day. I'm a big believer that as more people get vaccinated, we will get past COVID. And, I also believe that in general, people are very resilient and we will get back to, doing the right things for each other, our communities. And, I'm very much half full. So, and hopefully moving towards 3/4 full.
I'm with you on that. I know Tim is too. Brian, thanks so much. Take care. Be well. Best to your teams as well. Brian Niccol, of course, the CEO of Chipotle Mexican Grill, joining us from Denver. You're listening to Bloomberg Business Week. Coming up, we're going to count you down to the closing bell. Also check in with the chart of the day. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
TikTok.
TikTok.
Almost time for the chart of the day.
And the song of the day.
And the song of the day. And then the closing bell. And then beyond the bell. And then the after bell.
It's what happens, right? It's a routine. I like a routine, okay?
Groundhog Day all over again.
I love it.
All right, let's get another check on the trading day because it's been quite a doozy. Here is Charlie Pellet.
Hi, thank you very much. And here's what's going on. 28 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ all declining. Bank stocks sank after reports President Biden will propose a capital gains tax as high as 43.4% for the wealthy. Banks could also suffer if investors are more reticent about trading in and out of their assets. J.P. Morgan Chase among the bank names moving lower, down now by 2%. Citigroup tumbling by 1%. Wells Fargo is lower by 0.9%. Bank of America down now by 1%. Stocks on track for their biggest slide since March. S&P turning lower after Bloomberg News reported that those earning $1 million or more, the new top rate, coupled with an existing surtax on investment income, means that federal tax rates for rich investors could be as high as 43%. S&P down 36 now, a drop of about 0.9%. NASDAQ down 123, down 0.9. NASDAQ 100 index down 1.2%. Dow Industrials down 309, down 0.9%. 10-year yield 1.54%. Gold is down 0.6%. 17.82 the ounce. West Texas Intermediate crude up now by 0.4%. 61.62 a barrel. India saw the world's biggest one-day jump in coronavirus cases ever as a ferocious new wave grips the country, overwhelming hospitals and crematoriums and prompting frantic cries for help on social media. Dr. Jennifer Nuzzo is a senior scholar at the Johns Hopkins Bloomberg School of Public Health.
I think earlier there were countries that maybe breathed a sigh of relief that somehow assumed that they escaped the worst of this pandemic, but we're seeing quite clearly that that's very much not the case, that many parts of the world still remain deeply at risk. So I worry about these headlines continuing for a year or more unless international partners get together and help share some of the vaccines that are there. We need to absolutely make more vaccines.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer shares down 2.1%. Its German partner BioNTech, the ADR is up 5.5%. ADRs of AstraZeneca down 0.7%. Moderna shares just turning negative, down by 4 cents, little changed. Johnson & Johnson down 0.7%. Recapping, stocks lower, S&P down 0.8%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Is this the Who?
Nope.
No.
It's not, but he started out a few years after the NSAE. That's what it is.
Wait. I need to hear a voice. All right, you're going to have to help us out here.
Well, I will tell you that, let's see. Here are a couple of fun facts. He went to high school in Montclair, New Jersey.
Jersey boy.
No, he was in Ohio before that.
Okay.
Went back to Ohio for college. He was at Kent State at the time of the massacre.
Oh, is it CSNY, one of them? No.
You have to think of another West Coast group, which he's been affiliated with for a number of years.
It's hurting me. All right, Dave, what do we got?
Joe Walsh.
Joe Walsh. Oh, the love of Stevie Nicks, supposedly. How's that?
Well, there you go.
Little addition
Anyhow,
of
course, he's definitely made his own name and made a name for himself in the Eagles as well.
Yeah, very, very much so, right? All right, so great song. We totally missed it. Chart of the day. Let's go.
Well, I
to
got to
it.
tell you, it's a bit of a back catalog kind of song, so I'm not surprised.
What's the title
Not
on
exactly
it?
one of his biggest hits.
Yeah, what's the
like,
title?
say, Rocky Mountain Way.
Okay.
For example. But welcome to the club came to mind when I put together this chart because, it looks at sort of a valuation gauge, price to sales ratios. I ran across this chart on Twitter yesterday that pointed out what was going on with the MSCI EFA index. And it's a gauge of developed markets outside North America. So you're basically talking Europe and Asia, think Japan, Australia, and so on. And within the past couple of weeks, this particular index, the price to sales ratio, has finally risen above its peak from basically the turn of the century. In this case, December 1999, right around the time, that you had a bull market reaching its apex. So, what's interesting is that it took so much longer for this particular gauge to get there than it did the S&P 500, which had peaked back in March 2000. We saw the price to sales ratio go above its high in January 2018, and as the chart shows you, in the past year and a half or so, it's basically obliterated the old high. So it's a matter of a bit of catch-up for the rest of the world relative to the U.S. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
It's about time, right?
Yeah, exactly. Well, let's face it. You think about what's been driving the U.S. higher. A lot of that's tied into what we've come to call big tech. You don't have quite so much of it overseas. You certainly have examples of it. You think about some of the chip equipment makers. ASML Holding in the Netherlands comes to mind, or Taiwan Semiconductor Manufacturing in Asia, though that doesn't quite fit the developed market category. You just don't have necessarily the kinds of stocks that have driven the U.S. up.
Right, and Dave, one thing I think about with a chart like this is just the way that U.S. companies are not really U.S. companies, right? You think Apple is, yes, it's an American company, but look at the sales that it has outside of the United States, right?
There's no doubt about it. So the sales around the world certainly are part of the mix. And I'll just point out real quick, my stock of the day, it's a company called Kodiak Biosciences. The ticker is CDAK. It's up 27.5% because there was a journal that came out with a study data on technology that the company's working with in one of their main lines of research. You're talking about the biggest gain for the shares this year.
Right.
So, Kodiak Biosciences, there you have it. Look for it at 4:15 Wall Street time on Twitter, @TheOneDave, also on Facebook and LinkedIn.
Still down 54% this year.
Oh, yeah.
Not to be a little bit of a bummer, but I'm just...
That's kind of a bummer, Carol.
They take all that they can get.
Yeah, I know. All right, Dave Wilson, thank you so much. You have a good evening. Bloomberg Stocks columnist and editor Dave Wilson. Do be sure to check out his stock of the day a little bit later on.
Just about 20 minutes to the close, and of course, we'll bring you those numbers when we get them. In the meantime, let's head on down to Washington, D.C. for a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. George Floyd's family was among the many friends and loved ones attending Daunte Wright's funeral today in Minneapolis. Wright was killed last week by a former police officer who authorities say mistook her gun for a taser. Aubrey Wright spoke about his son during today's ceremony.
I don't really speak much, but words can't even explain how I feel right now. That was my son.
The white officer, 26-year veteran Kim Potter, has been charged with second-degree manslaughter. She resigned soon after the shooting. Well, the House has approved another bill on the Democrats' wish list, statehood for the District of Columbia.
The bill passed the House last year. The Republican-led Senate didn't take it up. Now the Democratic-led Senate will.
I rise as Speaker of the House to join my colleagues on this momentous day for American democracy to finally grant Washington, D.C. statehood.
Ranking Republican James Comer.
This bill is nothing more than an attempt to advance a radical agenda that continues to come out of this House and stalls in the Senate.
Some Republicans suggested giving the residential parts of D.C. back to Maryland so its citizens could then vote in Senate races. In Washington, Irv Chapman, Bloomberg Radio.
It's a sentence of life in prison for an immigrant from Bangladesh who detonated a pipe bomb in a crowded New York subway back in 2017. Prosecutors say Akayed Ullah set off the blast in a pedestrian tunnel beneath Times Square and the Port Authority bus terminal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So a couple stories that we want to bring to your attention. One has to do with Cathie Wood and ARK Invest. And she wrote in a tweet that a world with Bitcoin is a world that at equilibrium generates more electricity from renewable carbon-free sources. And actually, she didn't write that. This was the ARK. Let me start again. Let's just start again. Reset here. We've often talked about Bitcoin mining and the amount of electricity it uses here at Bloomberg. It's often talked about as being an energy hog, but Cathie Wood of ARK Invest has come out and said it actually could be good for the planet. Cryptocurrency mining can drive investment in solar power and make more renewable energy available to the grid, according to a post from ARK Research Director Brian Witten and co-authors Yassine El-Mandra and Sam Koros. So they are talking about, listen, the more we need it, the more investment's going to go into it, and the more productive it will become.
Like, it's a supply and demand thing, is
Correct.
what Cathie Wood is arguing here. And Carol, I got to tell you, there is a lot of pushback to this.
Well, listen, it isn't a widely accepted view by a lot of other folks. There has, listen, Bloomberg has done a bunch. Bloomberg Green has done a lot of reporting about, the use of electricity being used, and I guess nobody sees any sign of that stopping.
Right. So here's the premise here, because it is a little complicated. I'm going to read from an article by William Mathis and Lars Paulson that's available on the terminal. Those are our colleagues here. The basis of the idea is that mining cryptocurrencies uses a lot of power and can be deployed at any time. That could help a developer make money minting coins at a time when there's lots of wind or sunshine, but not much electricity demand. Making better use of wind and solar, where power generation can be intermittent, increases efficiencies, lowers prices, and helps encourage the green transition. The issue, though, is the theory is based on trends that are already happening, regardless of crypto. Our colleagues right. So this is already happening in the clean energy space.
Exactly. And, what the ARK folks say is that critics talk about, the computation required to secure Bitcoin, even if necessary, is environmentally damaging and ruining the planet. They say that's what critics say. ARK Research says we believe that the opposite is true. A world with Bitcoin is a world that at equilibrium generates more electricity than renewable carbon-free sources. So we shall see, I guess, right? It's one of those.
But it uses a lot of electricity regardless.
Yeah, no doubt. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stocks are off session lows, but still a down day. In fact, stocks on track for their biggest slide since mid-March after President Biden was said to propose almost doubling the capital gains tax for the wealthy. S&P now down 33, a drop of 0.8%. The Dow is down 284, also down 0.8%. NASDAQ down 112, drop there of 0.8%. The NASDAQ 100 index down 1.2%, but an up day for the Russell 2000. Little change, but higher by 0.1%. 10-year yield now 1.55%. Gold is down 0.6%, $17.83 the ounce. And West Texas Intermediate crude up 0.4%, $61.62 a barrel on WTI. Again, recapping here, stocks lower, S&P down 0.8%. Earnings after the bell from Intel down now by 1.9%. Snap Inc. down 1.4%. Mattel higher by 0.4%. WWE World Wrestling Entertainment down by 1.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed. Just about 10 minutes, 9.5 to be exact, left in today's trading session. Let's get to the drive to the close. Aaron Kennan is back with us, co-founder and chief executive officer at Clear Harbor Asset Management, $1 billion in assets under management. Back with us on the phone in Stamford, Connecticut. Aaron, nice to have you here. A lot going on. Got to ask you, though, first, not market related, but hybrid working. How's it going? Because I still remember when you said we pulled our people, closed our offices out of New York. We're going to kind of embrace hybrid and work that way. You still doing that? How's it going?
So we opened up our new headquarters in Stamford back in July, and we've been rotating in and out ever since then, Carol.
Yeah.
So we're sort of normalizing now. I'm in every day and really look forward to seeing my colleagues in the office. We do wear masks when we're out of our individual offices, but certainly feel as though the collaborative environment's adding value.
Well, I got to cut right to the chase here and get to the big news today that our Bloomberg colleagues broke.
I buried the lead.
Yeah, it's okay. The president eyeing a capital gains tax as high as 43.4% for the wealthy. As soon as that happened, stocks moved lower. Well, as soon as the news report came out, stocks moved lower on the news. Your initial reaction to this?
Right. Well, I think as a political calculus, it could make good sense for currying favor with the Democratic base. But if the goal is ultimately to increase tax revenue, I think it sort of fails miserably. It's sort of counterproductive in so many ways because the wealthy, as they do even now, but I think they'll do to an even greater degree, will just allocate more of their earnings to non-for-profits, more of their earnings to donor-advised funds. I think they'll hold off on making those capital gains sales because, of course, the tax code allows for stepped-up capital gains upon death, and so that basis just steps up after their passing anyway. So it just doesn't seem to achieve the desired economic goal, and I think it sort of prevents the fluidity of capital moving around the system as it should in a natural way. I think you could have asset prices trading at valuations that are sort of unhealthy and artificial in some nature because there's just sort of a lack of an ability or willingness to make sales.
Well, and it's interesting, too, our Mike McKee talked earlier, Aaron, and he made reference to 1994 when President Clinton then raised corporate gains, capital gains taxes, too. And he said, we went into a budget surplus. there are lots of things we need to look at when we're talking about this. But I mean, is there a time in history that you can look back and kind of get an idea of what might happen in terms of the equity markets as a result of a higher capital gains tax?
Well, I think, you end up, it's sort of like the corporate tax rate, right? If you start nudging that upward too, you had your CEO of Chipotle on just a little while ago, and he didn't want to say it, but what I think he wanted to say was, well, we have to raise prices, right? And so if we're going to maintain our earnings, we have to raise our prices. So who has to pay more for a burrito? It's the consumer. So who's kidding who, right? So I think this is sort of the reality. There's a lot of politics embedded in this. I will admit that this is probably a first sort of shot at goal for the Biden administration. They know they're probably not going to settle at 43.4% at the high rate of capital gains, but it just doesn't make great economic sense either.
But the Biden administration has some very ambitious plans for the next 2 years and the next 4 years beyond, it hopes. How does it pay for those, right? It's already floated, increasing the corporate tax rate. It's something that I asked Brian Niccol, CEO of Chipotle, about. But they're going to have to pay for it in other ways, too. And like you said, politically, this may be a way to do it.
Yeah, I just don't think the pie expands, and I think that's the challenge here. I think the pie actually shrinks under this proposal. And so what you're asking is, how do we expand the pie? And I think stimulative economic policies can do that on the edges. We are in an environment where we've spent massive percentage of our GDP on fiscal stimulus, and that's certainly going to provide growth, but not sustainable sort of growth. I think the secular trend will rear its unfortunate head in perhaps 2023, 2024, and beyond, and then we'll have to contend with the massive deficits that we've built up over the last, not just 12 months, of course, but last many years. And those headwinds to growth due to the deficits will be, another point of concern for the economy and for earnings. But for now, we're seeing record earnings, record growth. We think we'll probably see 10% annualized GDP growth next quarter, which will probably be a peak for the cycle. And Europe will probably start to accelerate their growth profile towards the back end of this year as the vaccine rollout improves there. And I think that's the other story of the moment right now, frankly, which is it's not a synchronous growth story globally. We walked into the beginning of this year and we thought, well, all of the world will have this vaccine rollout at the same time, so we're going to see the synchronous growth. We're not. And I think that has positive ramifications for the inflation story, too. That demand side is not occurring all at once globally. It's happening here, and it will roll into Europe and then South America and hopefully India after they can sort out their vaccine woes.
But unfortunate, because we really do need to see the vaccine moving more aggressively around the world. Hey, Aaron, though, so what is your take on the infrastructure plan and the plan by the Biden administration, the president specifically, about investing in America's future? We see China do it. I know these are two very different countries, but I do wonder, as an investor, do we at some point need to give companies a break, give a country a break to invest in the future, whether it's rebuilding the semiconductor industry, whether it's rebuilding, alternative energy or building alternative energy? Should we not be providing support for that because that's kind of our future?
I do think there are some key, the transportation component of the infrastructure bill has a great deal of merit, right? We need highway systems, we need bridges, we need Wi-Fi, we need 5G in this country. We need to be able to compete. But if we're going to compete, we also have to compete on a reasonably level playing ground as it pertains to taxation. And I guess that's where I sort of go back to, that point. I think if the Biden administration's objective is to bring back jobs to America, we need to be able to compete with the world to do that, because not only is money fungible, but a lot of these goods and services are fungible too. And so I think taxation is a critical variable there. As it pertains to the decarbonization initiative, I think this is the future in so many different ways in both the United States and around the world. And there are huge opportunities. Now I'm putting my investment cap on when I say this. There are huge opportunities and tailwinds that we believe, one can invest in over long periods of time, whether it's wind and solar, or frankly, and this may sound counterintuitive, but the demand side on the metals and mining side of the docket, where copper demand is going to outstrip supply massively over the next several years. We think by 500% to 900% based on many different research reports of late between now and 2030. And we just do not have the supply online. It takes 8 years to build a mine. And what's important about copper, of course, is it's required to build a wind turbine, to bring solar on board, and to really decarbonize the entire electrical grid.
Hey, we got to run. Always good to check in with you. Really appreciate it. Aaron Kennan, he's co-founder, chief executive officer at Clear Harbor Asset Management. Coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, YouTube, counting you down to the closing bell.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, 4137 on the S&P 500. Romaine Bostic, Caroline Hyde, and Taylor Riggs counting you down to the closing bell, and here to help take us beyond the bell, our global simulcast team, Carol Masser and Tim Stenovic, joining us right now, bringing together our Bloomberg television, radio, and YouTube audiences worldwide. And Carol, we had a pretty good day here earlier today, and then we got those headlines about that potential tax proposal, and that erased a lot of what we had.
Well, whiplash, talk about it. If you blinked, all of a sudden the markets went from gains to losses. We're pretty much hovering around our lows of the day, but we're seeing all of the major industry groups in the S&P 500 under pressure. The big question is about capital gains tax, guys. Tim, is that whether or not we ultimately see something happen, but investors have to be kind of a calculus right now about what to do.
Yeah, look, on Bloomberg Radio, we just spoke to Aaron Kennan, who said this is basically like an opening salvo here, right? And although the report indicates that the Biden administration is looking for this, perhaps this is just an opening offer as something that could end up going lower, but certainly the market's not reacting positively to this news.
And we echoed similar comments from Chris Ailman of CalSTRS, who we just had on this program, Caroline, as you're well aware, and really highlighting how that punishes the long-term investments of which he is so into the market. And how do you close the deficit of what she said he's been worried about for 15 years, but not punish those long-term investors as well?
Long-term money. We've got to remember this is a tax aimed at the wealthy. And we know that big spending is being promised when it comes from an infrastructure bill. At some point, well, they always said it was going to be funded. I'm interested by the whiplash, considering this was a campaign promise, Romaine.
Yeah, and those headlines crossed a little bit after 1 p.m. New York time here. We had about 50 points erased off the S&P 500. It did try to recoup some of those losses, but it's going to end the day down about 0.9%, 4134. The NASDAQ composite, 13,817, also down about 0.9%, call it. Dow Jones Industrial Average also down 1%, back below 34,000. And we should point out the Russell 2000 had been the outperformer here on the day. I guess technically it still is. It was up as much as 1.3% here before those headlines moved. It's going to finish the day down right now, down about 0.3%.
Romaine, I love that you mentioned the small caps. There was some great stuff on the Bloomberg today. I'm going to read my notes here. Russell 2000 members trading above their 50-day moving average, falling below 40% compared to about 80% for the large caps. We're looking at that gap. And previous instances when we've seen that, we've also seen some more pressure on stocks. All right, Intel crossing the Bloomberg terminal. Let's get to it. First quarter revenue, $19.67 billion. That is down about 0.8% year over year. The company, though, and this is going to be key in terms of the trade, Caroline, they are raising their 2021 fiscal, or I should say 2021 year guidance.
Yeah, why? Because they supply chips. Why? Because everyone's desperate for them, of course. We know the supply side issues that have surrounded overall the chip supply chain. Of course, this is why Intel is doubling down, wanting to bring back manufacturing, the fabs as they're known. But we're off by 0.25%. Interesting remarks as they say their full year adjusted earnings per share, $4.60. So they'd seen previously $4.55.
But
the estimate was for $4.56.
Caroline, do you see this data center revenue, though? I mean, you're talking about a $5.6 billion number coming in. That's below what the street expected. I mean, all the time we're here talking about the competition that they have with AMD and NVIDIA and all these other companies out there. This is all about data center. They've been losing ground here, and then you come in and miss on that number. No wonder the shares are down.
Yeah, Intel stock up 25% this year, but right now after hours down a little more than 1% as investors try to make sense of these numbers. The shares so far this year have outpaced the advance in the Philadelphia Stock Exchange Semiconductor Index, which is advanced by 12%. I'm looking for commentary, guys, about how the company is thinking about government help when it comes to actually improving the supply chain here in the United States.
The only commentary I see so far, I'm only on page 1 of the press release, Caroline, but the commentary that I get from, of course, the new CEO, Pat Gelsinger, saying this, of course, a pivotal year. We are looking at momentum. We are trying to rapidly progress our plans with a reinvigorated focus. We want to accelerate our trajectory, capitalize on the growth in semiconductors to power, of course, this increasing digital world. So really trying to come out with some strong words to reassure that they are on that plan and they are tackling Intel 2.0.
Intel predicting second quarter revenue of $17.8 billion, a profit of $1.05 a share. Analysts were projecting $1.11 a share on revenues of $17.6 billion.
I mean, they're not really raising much in terms of their full-year adjusted revenue, are they? 72.5 billion. They'd seen 72 billion.
Well,
so
and the other thing,
they just managed to raise it by $500 million. I'm not scoffing at 500 million, guys, but interesting that the street had basically seen about 72, so maybe a bit of a letdown there as well, Romain.
Yeah, absolutely. And I mean, look, I mean, we talk about this earnings season. I mean, the numbers, the backward-looking numbers, certainly important here. But people really want to see those forecasts nudge a little bit up, particularly for companies that are in very competitive industries like this. And we know all the issues Intel has had. Obviously, they had a relatively new CEO here who still needs a little bit more time. But at least right now, in the short term, Carol, still some pressure.
Well, Romain, I think you get right to it. I mean, this is 1 month after Pat Gelsinger announced that he's going to spend billions on manufacturing. They're going to build a bunch of new factories. At that point, they gave information on the first quarter. What's important here is the second quarter, and the company did say it sees second quarter revenue of $18.9 billion. Company sees second quarter adjusted EPS of $1.05 a share versus an estimate of $1.11. So, you know, a lot of the street was looking for a little bit more of an outlook from this company, especially into the second quarter and beyond.
Carol, that might be the understatement of the day. Pretty much all the analyst commentary I got said that this is going to be an underwhelming first quarter because all they cared about was that forward guidance, right? Susquehanna, Tim, is one commentary that I'm reading here as we were heading into the print, saying management had set expectations for an underwhelming fiscal 2021. How do we grow from here? How are we hearing comments around CPU inventory? Yeah,
you heard Romain talk about the data center group revenue coming in at $5.56 billion. That's down 21% year over year. Also, the estimate came in at $5.89 billion. Gross margin, 55.2%. That missed analyst expectations of 57.98%.
And the other thing, too, I mean, we're all waiting for some other earnings here, too. We should point out Snap and Mattel going to report later tonight. But even prior to this earnings report coming out, we had seen a lot of weakness in a lot of those chip stocks. A lot of this seemed to be tied to concerns about inventory build. Remember, this chip shortage has sort of been working to their advantage, but there's this concern here about a lot of pull forward here, Caroline, in some of that, and that, well, okay, you get a little bit of a boost here in Q1, maybe into Q2, but once you get to the second half and into 2022, maybe that all goes away.
Gross margin, 55%. Missing the analyst estimates of 57%. Margin is really going to be the watchword for the whole of the earnings season, really, I think, Carol, because this is going to be the tell. This is going to be if you've got cost increases on the rise. Shouldn't perhaps be affecting the likes of chips so much as we've been seeing with Chipotle, for example, the CEO we spoke to a little bit earlier, and some of the commodities that underlie there. But interesting that we're seeing a margin hit overall. Mattel, it looks like it's coming out, Romain. Mattel, first quarter adjusted gross margin, 47%. Actually, well ahead of expectations there of 44%.
Yeah, I think we should turn just real quickly here and look at Skyworks here. They actually just coming out with a statement here saying that they're going to buy the infrastructure and automotive business of Silicon Labs. Silicon Labs shares are halted right now at the moment. This is about a $3 billion deal, so not a massive deal here, but an interesting strategic one specifically for Skyworks. But this, of course, been trying to diversify a little bit away from Apple and that supply chain with the iPhone.
Yeah, Mattel, you guys mentioned that. I'm going to go back to that. That stock, we're seeing it up about 3.5% here in the after hours. I mean, this has been one of the pandemic winners as people were stuck at home. They bought a lot of toys for their kids. It's up again 20% this year. We're going to be talking with the Mattel CEO tomorrow. So, you know, kind of getting an idea. And the supply chain is one of those things I want to find out about, right, in terms of how they're managing it.
I just got to say, this is one of my favorite pandemic stories, guys, right? The narrative that emerged. Yeah, the narrative that emerged over the last year was right, especially at the beginning of the pandemic. Everybody was stuck at home. Grandparents wanted to spoil their kids. Parents wanted to spoil their kids. They were sending them Barbies. They were sending them Hot Wheels. They were sending them Fisher Price.
They wanted to spoil, but they wanted to keep them busy.
And don't forget about all the games. All the games. You know how many games we bought during the pandemic?
A ton. A ton.
Yeah, it is a distraction, my friends. I love it that Tim thinks it's treating your kids, but I think there's also a lot to do with a slight
I only have
distraction.
one, so that's where that's coming from.
You know, all I have to say is we take a look at those red heads again about Skyworks buying Silicon's lab. One thing that really sticks out to me, $2.75 billion, it is all cash. It is accretive immediately. If it is cash, Romaine, you do not want to share the upside with the target because you as the buyer want all of the upside for yourself. It signals confidence in the deal. You're not giving away that stock for nothing.
Absolutely, yeah. And this is actually a big deal. I'm sure we'll get a chance to dive into it a little bit later, but just from a strategic standpoint, this is actually a big deal for Skyworks. It really goes well beyond that $2.75 billion price tag.
Guys, keep an eye on Snap. The company expected to release earnings later today. It's had an incredible run over just the last year, a far cry from what it was just a few years ago. Big question that I have about Snap is how are people going to use it post-pandemic? Again, when things are going back to normal, are people going to be using their phones as much, communicating over their phones as much, and using Snap to do that?
All right, we're going to wrap it up, folks. Right now, Intel down about 1.25% here in the after hours. That's going to do it for our cross-platform coverage on
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So I am watching Intel in the after hours, down about 1.25%. So this is going to certainly carry over into tomorrow's trade, and we'll see what kind of further analysis, what comes off on that analyst call, and especially with a little bit of the margin compression there. So, and the second quarter outlook maybe being a little bit of a disappointment. That is certainly going to come up on the call.
All right, you're watching Intel. I'm watching Mattel a little bit in after hours right now. Stock is higher by just about 1.7%. Again, the headline there, Mattel first quarter adjusted gross margin 47%, beating estimates of 43.9%.
Right. Still expecting to hear from Snap, still expecting to hear from Samuel Adams. And I do think it was interesting. We just talked with our TV colleagues about Skyworks. We had a big deal buying Silicon Labs infrastructure and automotive operations. So we continue to see companies taking strategic moves, doing deals, doing things in this environment. So something to think about as we head into the Friday trade tomorrow.
It's Friday tomorrow.
Almost. It's Friday Eve.
That's right.
Have a good evening.
Thanks, you too. I'll see you tomorrow.
All right, see you tomorrow. You're listening to Bloomberg Business Week. Carol Masser, Tim Stanovic. Let's get a check on world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Joe Biden is marking Earth Day by pledging to halve U.S. greenhouse gas emissions by 2030 and increase financial aid for developing countries that curb their pollution.
The signs are unmistakable. The science is undeniable. But the cost of inaction keeps mounting. The United States isn't waiting. We are resolving to take action.
Biden spoke as he convened 40 world leaders in a virtual summit on climate change. Well, the White House is hoping for more momentum behind police reform after the Derek Chauvin verdict. Bloomberg's Nathan Hager reports.
Attention is focused on 3 key lawmakers to get the George Floyd Justice in Policing bill passed in the Senate.
The big names are Tim Scott, Cory Booker, and Representative Karen Bass.
Bloomberg Government's Emily Wilkins.
They're working on crafting the House-passed Democratic bill into some sort of legislation that can get bipartisan support in the Senate. Remember, they need those 10 Republican Senate votes.
Senator Scott says a bipartisan bill could be ready this month, but so-called qualified immunity that protects officers from lawsuits remains a sticking point. In Washington, I'm Nathan Hager, Bloomberg Radio.
After more than a decade in which the Supreme Court moved gradually toward more leniency for minors convicted of murder, the justices today moved the other way. The High Court ruled 6-3 along liberal conservative lines against a Mississippi inmate who was sentenced to life in prison without the possibility of parole for fatally stabbing his grandfather when the defendant was 15. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio. Joining me is Charlie Pellet. Charlie, I just want to mention, because there's a lot of headlines crossing, and I do want to bring it out to our listeners. Intel, which just reported earnings after the close, the company's CEO, Mr. Gelsinger, saying that the Intel upside constrained by supply, and this is certainly something we've been hearing within the industry.
All right. Also, too, can I just mention Snap? It just
please
reported,
do.
first quarter revenue, $769.6 million. Estimates there, $744 million. So a beat on the revenue number for first quarter out of Snap. Shares right now, they're trading down by just about 1%.
Yeah, and Intel's down about 2.5% here. The company also saying they did give a conservative forecast, but it could be helped out by supply. So I think it's one of those things like, stay tuned. We could hear more. Speaking of always staying tuned, Tesla, Consumer Reports engineers saying they easily tricked, their words, a Tesla vehicle to drive via its autopilot feature without anyone in the driver's seat just days after that fatal crash in Texas, where police said they found no one behind the steering wheel of a Tesla car. We talked about it a lot here at Bloomberg.
Indeed. Shares lower today by 3.3%. The big question in my mind is, how do you test this out? And our story answers that question by our Ed Ludlow and Dana Hull. They had test drivers take several trips on a closed half-mile track in a Tesla Model Y SUV. And what they did was they took a fairly light chain, a small weighted chain. They put it on the steering wheel to simulate the weight of a driver's hand. And the engineers said they tricked the Tesla to drive via its autopilot feature.
It says, here's a quote, "In our evaluation, the system not only failed to make sure the driver was paying attention, but it also couldn't tell if there was a driver there at all." This is from Jake Fisher over at Consumer Reports. He's the senior director of auto testing. Fisher was able to reach over from the passenger seat and accelerate the car using a dial on the steering wheel.
Indeed. And again, just to underscore, shares lower today by over 3%.
The other side of it, we know Tesla CEO Elon Musk took to Twitter earlier this week, and he said the vehicle's driver assist features weren't the reason to, that weren't to blame, actually, he said. All right, Charlie, thank you so much.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on Intel shares, down now by 2.3%. Intel falling after quarterly profit forecast disappoints. Intel did boost its full-year revenue forecast. Intel's first quarter adjusted revenue, $18.6 billion. Estimates were for $17.7 billion, but to underscore, shares are trading lower. Intel, by the way, says it sees no indication of a PC demand slowdown. Also out after the closing bell, Mattel. Its shares are higher in extended trading after beating Wall Street's estimate for the first quarter, fueled by a surge in doll sales and toys for small children. Right now, Mattel up by 5.8%. One additional headline, Skyworks buying Silicon Labs infrastructure and automotive operations. Stocks had their biggest slide in 5 weeks after President Biden was set to propose almost doubling the capital gains tax for the wealthy. S&P down 38, a drop of 0.9%. The Dow down 321, also down 0.9%. NASDAQ down 132, also down 0.9. 10-year yield 1.54%. Gold down 0.6%. 17.83 the ounce. West Texas Intermediate crude up 0.5%. 61.64 a barrel. Bitcoin lower now by 4.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. Charlie, thank you so much. Charlie, of course, tracking all of those earnings after the closing bell. Just to rehash, Intel shares down about 2.1% here. The company's CEO coming out and saying revenue upside constrained by supply. So let's get into it with our own Dan Morgan. I can say he's our own because he's like a buddy of the show. He's VP and Senior Portfolio Manager at Synovus Trust Company. They've got roughly $21.1 billion in assets under management. Back with us on the phone from Atlanta. Dan, nice to have you back.
Hi, Carol.
So Intel's down about 1.9%. What jumps out at you from this most recent quarter?
Well, Carol, you kind of went through the headline news, right? First quarter adjusted revenue, $18.6 billion above estimates, 17.7, and of course they beat on EPS, right? On adjusted $1.39 versus $1.14, and then they upped their guidance for the remainder of the year. But then I guess the street is focusing on the second quarter. They didn't really. It's kind of a tit for tat. But the one thing that kind of stood out to me, Carol, and this has kind of been happening over the last couple of quarters, is that their data center group, which is the group that produces the chips that go into the servers that, let's say, Amazon's AWS or Microsoft Azure or Ali Cloud for Alibaba or Google GCP, these huge enterprise data centers, that was missed estimates. And that kind of stood out in my mind because it was down 20% year over year, came in at $5.56 billion. I was looking for $5.84 billion. So that was a little bit disappointing. They kind of made up for it a little bit in regards to their cloud computing group. That was actually up 8%, and that beat estimates.
Right.
But I think, Carol, I think this right now, everyone's kind of like in a wait-and-see mode for Intel. You know what I mean? It's like, well, let's see what you guys can do with these new foundries that you're talking about building.
Well, and that's certainly what the CEO hopes. He talked about it a month ago, right? Spending billions. But let me go back to the data center group because we were just on with our TV colleagues and going through those Intel numbers, and our Romaine Bostic talking about the data center group big time. Put it in perspective about the different businesses that Intel plays into and what are the most important. Where's the growth?
Well, you're right. I mean, and if you look at the data center group, for example, their cloud segment, which is a big segment for them, it was down 29%, right? Enterprise and government, right? That was down 20%. So that's just some segments within the data cloud group. And, Carol, the cloud segment is interesting, right? We've got a couple of moving forces, right? We have the fact that there's kind of like a wave effect in terms of demand, where it gets very strong, then it goes down again. We also have another effect, which is, AMD and NVIDIA, who weren't really around in this space very strong a couple of years ago, are really kind of giving Intel a bit of a show.
Yeah.
And I think the competition is heated up. You and I have had quite a few shows and talked about NVIDIA. They've been executing on all cylinders, and they bought Molinx, which has really helped them beef up that segment. And that's another part of this caveat for the data center group that I think we have to recognize with Intel, and that is that competition has picked up a lot here in the last couple of years.
And Intel is just such a giant ship to move. I mean, can they, what Pat Gelsinger is doing, and they're spending billions, they're, trying to kind of right the ship here. Can he do it?
I hope so, Carol. I'm really rooting for Intel. You know, I mean, they are one of the largest chip producers in the world. Do you know that? They're like number 1 or 2. They're massive. Like you said, it's like a battleship.
Yeah.
And it would be just phenomenal because you and I have talked about this before about why are we having so many shortages? Because we don't have enough capacity. 75% of all the fabs are in the Asia Pacific area. Let's build some here. And now all of a sudden, boom. $20 billion are going to go into building fabs here in the U.S. And I would love to see them be able to execute on that because we have such great companies here from a design perspective.
Right.
And you've got a lot of companies that we don't think are chip companies, right? We think about Amazon and Google with the Tensor unit. They all have these great designs, and they're sending them out to these other foundries. They could actually run those chips here in the U.S., and that would be a boom for both them and for Intel. So I'm really rooting for them this time.
Right.
I'd love to see them be able to do it, Carol. And you and I talked about this on previous shows. We got to get some domestic capacity.
We've got to get some domestic capacity. But, I mean, so when you see the government involvement or thinking about, you know, the semiconductor industry and what they can do, is that how we do it, or can the private sector do it alone? Can Intel do it alone?
I think we got to get some government help here. I mean, the Department of Defense has already came out, as you said, Carol, and basically 100% behind us, right? Just from a strategic national security perspective, we can't rely completely on manufacturing chips because they're so critical to our entire food chain and manufacturing outside. So you've got them behind it, right? So, yeah, I think going forward, you know, it would be nice to see some sort of help from the government. I mean, you know, all these companies like Samsung and Taiwan Semiconductor that are in the Pacific Rim, guess what? All the countries that they're in, they're like 100% backed by the governments, right? They're helping them, giving good loans, good terms, and tax breaks. So I would love to see that happen for, let's say, Intel or any other chip producer who wants to build foundries in the U.S.
So they did say the company gave a conservative forecast that it could be helped by supply. We talked about some of this. Profitability in the second, half crimped by cost competition. They did say they've got 50 customers in the pipeline for the foundry effort. Looks like they're moving forward. Just got 30 seconds left here, Dan. What do you want to leave our audience with, and what do you think investors need to know here? Final thought.
Well, I think the big thing is look at these shortages from a sector by sector specifics. Don't get too caught up in all the headline news. We know that auto and industrial get the big headline news, but Intel is still a bright spot in terms of foundries. They only have a 1 week lead time, and Texas Instruments actually come out and said that they're not seeing huge lead time. So I think we got to work through this, and we will by the end of the year, and then we'll start to get more positive news in regards to these shortages.
You always get right to it. Such good stuff. Dan Morgan, have a good night. Senior Portfolio Manager, Synovus Trust, on the phone from Atlanta. Intel shares just down about 1.9%. You're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So coming up, we're going to check in with our own Shelley Banjo. She's a senior writer at Bloomberg News. She's also our New York bureau chief. She's also host of the Foundering podcast, and they've got a new season. It's all about TikTok, so we'll get into that in just a moment. First up, though, back to your top business stories. A lot of earnings after the closing bell. Let's check in once again with Charlie Pellet.
All right, thank you very much. The big one you were just discussing, Intel. It is the biggest chip maker. It did report a drop in data center revenue, along with a steep decline in gross profit margin, a sign it's losing market share to rivals and customers who are designing their own components. Shares now lower by about 3% in extended trading. We're also keeping an eye on Mattel. Mattel shares rallying after beating Wall Street's estimates for the first quarter, fueled by a surge in doll sales and toys for small children. Mattel shares up by more than 7%. Stocks had their biggest slide in 5 weeks today after President Joe Biden was said to propose almost doubling the capital gains tax for the wealthy. S&P down 38, a drop of 0.9%. Dow Industrials down 321, a drop of 0.9. Nasdaq down 131, a drop also of 0.9%. 10-year yield 1.54%. Gold down $10 the ounce, down 0.6% to $17.83. West Texas Intermediate crude up 0.5%, 61.66 a barrel. Well, as for the market backdrop, Aaron Kennan is CEO at Clear Harbor Asset Management. He was our guest right here on Bloomberg Business Week.
For now, we're seeing record earnings, record growth. We think we'll probably see 10% GDP, annualized GDP growth next quarter, which will probably be a peak for the cycle.
And on the economy, Francis Donald is Global Chief Economist at Manulife Asset Management.
What matters for the United States now, for me, the most important known unknown is how fast labor supply comes back to America, because that's the key to wages, that's the key to unlocking 2022 and 2023 growth.
Consumer Reports engineers say they, quote, easily tricked a Tesla vehicle to drive via its autopilot feature without anyone in the driver's seat, only days after that fatal crash in Texas where police said they found no one behind the steering wheel of a Tesla car. Tesla tumbling today by 3.3%. And Fisker's slide accelerated today after a Goldman Sachs rating downgrade to sell, with the decline in the electric vehicle company's shares now extending to more than half since they had a record in March. Fisker today plunging by 9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate the update. Well, TikTok has emerged as a defining app of a generation, but it also became a victim of its own success, attracting sharp scrutiny from the world's two most powerful countries. We're talking about U.S. and China. Now, the new season of Bloomberg's Foundering podcast takes listeners inside the mysterious rise of China's mega startup. Here with a preview is Bloomberg's Shelley Banjo.
I get a call, and I answer, hello? And there's this guy on the other end. Yeah, you emailed my daughter? He goes, she's 12. And I was like, oh, okay, sorry about that. And he goes, yeah, listen, everything's all right, but you got to answer me this one question. Why does she come home from school and say that she needs a manager? And I'm like, well, I don't know. Maybe it's because she has 900,000 fans on TikTok.
There was a time when most adults didn't know what TikTok was.
If you haven't heard of TikTok, TikTok is the most addicting app in the entire world. If you get it, I'm warning you, you will be on it for 4 hours, just scrolling through your For You page.
Most people still don't know the real story.
One day I was on Caltrain from Mountain View to San Francisco. And on that train, there were lots of high school students, and I was observing their behavior.
How two mysterious tech founders from China captured the attention of an entire generation.
I think there was some natural skepticism of like, hey, can we trust these guys? We've had issues in China with intellectual property.
Took on the most powerful man in the world.
We're looking at TikTok. We may be banning TikTok.
I want to keep listening. That's the new season of Bloomberg's Foundering podcast. And let's bring in Bloomberg's Shelley Banjo, New York bureau chief. She's been a senior writer here, too, at Bloomberg News. TikTok. What a great story.
Thank you. Thanks so much for having me. I'm so excited about the launch of this podcast.
Well, tell us about it and what you kind of learned about TikTok in the process.
Yeah, so I got into this a few years ago. I was just amazed by the growth of this company, and obviously over the last year, it was the, just focus of Donald Trump for so long, and then it just kind of went away, and we were kind of left with this thinking of what's going to happen to this app. And so we kind of traced the story from the very beginning up until now, and the most surprising thing I found was that it feels like this app is just kind of happened, this spontaneous app. And when you look at it, it's really a business story. Everything about it is about marketing and money and power and, the really big elements of everything that makes a good business story.
Nothing happened by accident.
Exactly.
So talk to us, because what I love about the story is you do get into the executives that are involved. I mean, they basically kind of figure out, determine, or make something go viral.
That's right. So we wrote a piece for Business Week looking specifically at this example of Megan Thee Stallion, which, she won this Grammy Award, was the first female rapper in 20 years to win a Grammy Award. And when you kind of pull back the curtain a little bit, you see, that TikTok had a huge, huge role in this. And they started looking at what sounds users are saving that they might make videos with in 2 weeks or a month from now. So they could basically see that Megan Thee Stallion and her song Savage was about to go really viral. And so they took all that learning and then threw a ton of marketing dollars behind it, put it in playlists, put it in, took over people's pages, and, really just made that whole song blow up.
Where do you think TikTok goes from here? I mean, when Donald Trump was in the White House, it was such a focus for him in particular. It's definitely calmed down a little bit, but where does it go from here?
Yeah, it's so funny to think back on 2020 because it was like the pandemic.
Is it really funny?
Right. Well, yeah, maybe funny is the wrong word, but you have the pandemic, you have wildfires, you have racial unrest, you have just probably the worst year in the world. And meanwhile, for a big part of that year, a lot of the headlines were on TikTok. Right. And all of a sudden, it disappeared. And the Biden administration comes in and says, okay, we're putting a total hold on all of this, the ban, the sale, a bunch of lawsuits that were winding their way through court. And meanwhile, TikTok is just growing like crazy. They became the most downloaded app in the world in 2020. And, the Biden administration is saying, we're going to study this. We're going to really take a hard look at what this means for national security, because there are real questions out there. But while they're doing that, TikTok is going to continue its rise.
How do I become a viral? Was it 12-year-old? Was it a 12-year-old, 13-year-old?
Right. I mean, these folks are working hard, though. We spend a lot of time with these creators, and these teens are really working hard at it.
It's pretty amazing. It's a great story. It's a great podcast. Bloomberg's Foundering Podcast, the new season with Bloomberg Shelley Banjo. You can find that at bloomberg.com/foundering or wherever you get your podcast, and I highly recommend everybody check it out. Also, check out the Business Week story because there's a lot of great details there. Good luck.
Thank you.
Great checking in with you. All right, that's Shelley Banjo. She's our New York Bureau Chief at Bloomberg News. And again, as I mentioned, check out the Foundering Podcast. All right, you are listening to Bloomberg Business Week. Coming up, we're going to talk a little bit about sustainable farming, what's going on with the CEO of Bowery Farming. He's coming up in just a moment right here on Bloomberg Radio. Let's go off to Nancy Lyons with a check on world and national news. Hey, Nance.
Hey there, Carol. Loved ones and friends gathered in Minneapolis this afternoon to mourn the loss of Daunte Wright. The 20-year-old black man was killed last week by a now former police officer who authorities say mistakenly fired her gun that she thought was her taser. Katie Wright became emotional speaking about her son.
My son had a smile that was worth $1 million. When he walked in the room, he lit up the room. He was a brother, a jokester. He was loved by so many. He's going to be so missed.
Wright says she stayed up all night wondering what to say. It is Earth Day, and President Biden opened a virtual summit of world leaders on climate change by pledging to pursue ambitious new goals to reduce emissions.
The president stressed the job-creating potential of clean energy.
The United States sets out on the road to cut greenhouse gases in half by the end of this decade. We'll set America on a path of net zero emissions economy by no later than 2050. all of us, and particularly those of us who represent the world's largest economies. We have to step up.
The leaders of China, Russia, and Great Britain accepted President Biden's invitation to join the summit, as did Pope Francis and executives of corporations that have set clean energy goals. In Washington, Irv Chapman, Bloomberg Radio.
Tension may soon be easing in Ukraine after Russia's announcement today it will begin pulling thousands of troops back from the border beginning tomorrow. It's seen as a step that could calm strains with the West that have surged in recent weeks. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Joining me once again is Charlie Pellet. This story definitely caught my attention. It has to do with a conversation that I believe our Shanali Bossack had with Blackstone President Jonathan Gray. Heather Perlberg on the print side of Bloomberg News writing it up, though, and it talks about Charlie, Blackstone Group. They are massive. They are doubling down on a post-COVID-19 economic recovery. They're investing heavily in businesses that are going to benefit from a world that is gradually opening, and it's a world that's very near and dear to you.
Indeed, absolutely. I got to tell you, though, I don't know if I'm going to travel this summer, but let's focus on what's going on at Blackstone. And I'll just tell you why. Airfares are going to be unbelievably high. Everybody's going to be out there traveling. Maybe this is the summer to be heading out to Jones Beach and then wait until the fall when prices come down. That's when Charlie Pellet will start boarding planes to travel to real places. Here's what's going on. We've got Blackstone, as you mentioned, investing $17.7 billion in the first 3 months of this year. They're buying hotels that include Extended Stay America, a private jet operator, Signature Aviation, along with a UK travel company, Bourne Leisure. So they are putting their proverbial money where their mouth is.
Yeah, and it looks like what they're doing, too, is thinking about some of the domestic plays as well. I mean, listen, with the U.S. government putting words of caution about travel outside the United States to most of the countries around the globe, I think international travel is going to be a bit tricky, and we've certainly heard that from the medical community going forward. But Blackstone, this is a company that has repeatedly looked for opportunities, in very beaten down sectors, and before everybody else is going into it, where they can pick up, properties at pretty cheap prices and then be in a great position for when the recovery happens, whether it happens later this year or next year.
Indeed, and there's a great quote in the story with Blackstone President Jonathan Gray saying, quote, "This should be a good time for the real world."
He says yeah, he does, right? And he also talks about the pendulum swinging back with a bunch of us getting out there again. It feels to me like this economic dam is starting to break. It is one of the most read stories on the Bloomberg. All right, Charlie Pellet, thank you so much. Really appreciate it. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Earnings front and center were all over those reports. Intel, the biggest chipmaker, reporting a drop in data center revenue and a steep decline in gross profit margin. Intel tumbling about 3.1% in extended trading. Also reporting after the bell, Snap Inc. It did report quarterly revenue and daily active users that topped estimates. Shares up now by about 5.7%. And Mattel surging almost 8%. Mattel higher in extended trading after beating Wall Street's estimates for the first quarter. Stocks dropped today, having their biggest slide in 5 weeks after President Biden was said to propose almost doubling the capital gain tax for the wealthy. S&P 500 did turn lower right around 1 p.m. Wall Street time after Bloomberg News reported that for those earning $1 million or more, the new top rate, coupled with an existing surtax on investment income, that meant the federal tax rates for rich investors could be as high as 43.4%. S&P dropped 38, down 0.9%. The Dow down 321, down 0.9%. Nasdaq down 131, also down 0.9%. 10-year up 4/30 seconds. 10-year yield 1.53%. Gold down 0.5, $17.84 the ounce, and crude up 0.5%. West Texas Intermediate crude 61.67 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet there. Well, a big focus on the climate this week and climate change. President Biden kicking off a virtual global climate, let's try that again. President Biden kicking off a virtual global climate summit. We know he did that today with world leaders. In keeping with that, we have a great guest. Irving Fain is the founder and CEO of Bowery Farming. Bowery, by the way, builds smart indoor farms and counts GV, formerly Google Ventures, among its investors. Also Henry Kravis of KKR, and a lot of leaders in food, including David Barber of Blue Hill, Tom Colicchio, and Jose Andres, also as investors. And Irving joins us from one of the company's farms in Maryland, the company, though, based in New York. Irving, nice to have you here with us. Tell us a little bit about what you guys are doing specifically.
Thanks so much for having me,
sure.
Especially on Earth Day. It is very appropriate, I guess.
Yeah.
We are, and you sort of hinted at it before, but what we do at Bowery is build smart indoor farms that we locate very close to the cities and the communities that we serve. And so inside of the farms, we actually stack our crops from the floor all the way up to the ceiling. And we grow under lights that mimic the spectrum of the sun in a totally controlled and contained environment. And so we can grow fresh, protected produce 365 days of the year, independent of weather and independent of seasonality. But what makes it even more interesting is we go completely pesticide-free, completely agrochemical-free food. So no herbicides, no fungicides, no insecticides, no pesticides. And whereas when you do that in the field, your quality suffers and your yield suffers, in our case, we're over 100 times plus more productive than a square foot of farmland, and we use a very small fraction of the water compared to traditional agriculture.
What about lighting?
Lighting, meaning we use lighting, or what lighting
well,
we use?
One of the problems that, I've done, some research and some work and reporting on some of these indoor farming is that the lighting that's needed is a lot of electricity. And so when you're looking for sustainable ways, right, you've got to look at the complete picture. And I'm just curious what's involved in making sure, because you say you take the seasonality out of it. And I'm looking at a lot of video, or I was earlier, on your website, and there's a lot of light, obviously, that's needed for plants. So tell me a little bit about that part of the equation.
Got it. And it's a great question, Carol, and I think it's something we think a lot about from a few different fronts. Most importantly, and number one, we power our farms with 100% renewable energy. And so the farm that I'm actually in right now in Maryland uses low-impact hydropower for 100% of its power. And we'll continue to do that as we continue to build farms. So the power that we go source is from renewable sources. The second piece that I think is important to understand as you look at what we're building is what we're really doing at Bowery isn't just innovating farming, we're actually reinventing the entire fresh food supply chain. And so we do that because we control the entire supply chain from seed all the way to store. So if you compare what we're doing at Bowery to agriculture, you actually can't just compare it to a farm. You have to compare it to the entire supply chain, from the harvesting to the transportation to processing and packing, and then storage across the supply chain and all of the trucking miles that are required to do that. And so we're eliminating thousands of food miles, a number of different steps where food is actually wasted. And because we're centralizing everything in one place, we can power it all, as I said, with renewable energy, whereas to try to put renewable resources against the entire existing agricultural supply chain today would be really difficult.
So are you a profitable company?
So we don't disclose our financials publicly because we are a private company, but we do think a lot about sustainability, not just from an environmental perspective, but also from an economic perspective as well.
Right.
Because to create the greatest impact, you need to create a sustainable, long-term viable business. And that's a really important focus of ours.
Okay. And are you creating a long-term viable business? Listen, we're Bloomberg, and I know you're not going to open up your books and show me everything. I assume you wouldn't be doing it, and you wouldn't have investors like Henry Kravis or, GV involved if they didn't see a profitable path at some point. But tell me a little bit. I want to understand the dynamics of this business. I had on Chipotle's CEO, Brian Niccol, earlier, and they are very into regenerative farming. They are very involved with farmers and that business, and looking, they have been, it's kind of in their ethos, if you will, that or their DNA in terms of trying to do farming in a different way and healthier products and so on and so forth. So I'm just curious kind of where you guys fit in and what's the math on this? What's the business metrics on this, and where does it go?
Well, so you're absolutely right that we're incredibly fortunate. To date, we raised $175 million from really incredible partners: Google Ventures, General Catalyst, Temasek, folks like Henry, and you mentioned a lot of great people who supported us to date. And as you said, folks like that don't support a company that they don't see a path towards becoming a large company and a large business, which requires one to build a sustainable business. But I think the other side of what your question was when you talked about Chipotle, which is really the interesting economic component of what we're doing, is really in that reimagination of the supply chain. Because when you look at today's existing supply chain around food and agriculture, it's really driven by the determinate reality that certain crops can grow only at certain times of the year in certain places. And so we have to adapt processing capacity and transportation capacity. It could be trucks or trains or boats or planes, and all of the other areas of a supply chain, which have lots of cost, a number of different middlemen, and also an extraordinary amount of waste. And so one of the real benefits that we can deliver at Bowery is because we can grow our crops year-round around any city, anywhere in the world, consistently and reliably. And that's driven by the technology that we develop, both automation and robotics, as well as software, computer vision, and the artificial intelligence that helps to run our farms. Because we can do that, we eliminate all those different middlemen in the supply chain. We eliminate all that waste in the supply chain. We deliver a product a day or two after harvest versus weeks or months of time. And we also rewrite the underlying economic equation because it just works differently.
Just got 30 seconds here. Do you stay private for a long time, or do you have to do an IPO to even be able to tap into the capital markets even more? Just very quickly, if you could.
Yeah, I think we've been really fortunate to have great investment partners to date, and where we really focus is on building a strong business, a strong company, and I think we believe that opportunities will unfold in front of us, but there's no question that eventually this could be a vibrant and durable public company.
Listen, come back, Irving. I want to hear more, as you guys do. I want to hear more about the business and where you guys are expanding as well. Irving Fain, perfect on this Earth Day, founder and chief executive officer at Bowery Farming, joining us on the phone from New York City. You've been listening to Bloomberg Business Week. I'm Carol Masser for the entire Bloomberg Business Week team and Tim Stenovic. Have a good and safe evening, folks. It's almost Friday. This is Bloomberg.